So, yo, what is up for y'all on the YouTube replay? Hope you're having a great Sunday. Skip 25 minutes into the stream, and that's when the market opens. So, at 8 o'clock, that's when the overnight market opens, and we can see how stocks are moving. But in the meantime, I'm going to be looking at some stocks. I'm going to go over one stock I own that I think is at a pretty good valuation right now. It's one I own in my Webull account. It's actually a grocery store, ticker symbol SFM. But let me give you a quick portfolio update really quickly. I'll be super quick because we're mainly going to be doing the portfolio update when the market opens in 20 minutes. But yeah, here are all the stocks I own in here. This right here is my buy and hold portfolio. Sorry, I'm getting my water here. So basically, once I buy a stock in here, I'm going to never sell it. That's the goal of this portfolio. I'm not taking a single profit on any stock in here. Like, even though I'm up 240% on this stock, I'm not trimming a single share. Not a single share of profit. Also, Comfort Systems, that's been a great hold. Then we have our main dividend growth portfolio. So this account is where I own all dividend paying stocks that are in the S&P 500. So we are luckily up on every single holding in here, and my largest holdings are at the top and then the smaller ones are at the bottom. And then, of course, we have a Roth IRA that's worth $1,900. I'm trying to deposit more into this account, but because it's a tax-free retirement account. But these are all the stocks that I own in here. Some more riskier names. But let me go over real quick. Sprouts Farmers Market. And hey, what up, Plasma? So this is SFM right here. This is a healthy grocery store, and here's why I really like this stock. Compared to like a Walmart or Costco, I think this one might have more upside potential simply because it's smaller and it's more growthy. But check this out. The sales are up 17% year over year. So that's very solid growth. Sales are up 17, but the net income, the profits are up 40% year over year. So what does that mean in English? Basically means they're expanding their net margins. They have a 6% net margins, which is abnormally high for the industry. Like if you look at Kroger, they have like a 2% net margin. So they've been able to grow their margin faster than the sales. And also, they're a super buyback friendly company. So if we go to the total common shares outstanding, look at in the most recent quarter here in the bottom left, it's 98 million. If let's go to 2019 or 2021, it was 118 million. So you own legit 18% more of the company just since 2021. Shares went from 118 million to under 100 million. That is crazy. So that's what I really like about Sprouts Farmers Market. And I do own them, so I might be biased. I got 7 shares at 137 a share, but that's why I really like them. Think they're going to be winner in the long run. Hey, what up, Bernie says Sprouts is a West Coast thing. I used to shop there for good vegetables. Yeah, it's like a fresh produce store. It's pretty cool. I haven't been to one in a long time. What do you think of the IPOs coming up? Yeah, there's one IPO that's in. I don't buy the IPO simply because they're so volatile and you can't sell your shares for 30 days. But Klarna should be interesting. It's one of the buy now, pay later stocks. And if we look at a firm, ticker symbol AFRM, that stock is just super profitable now. So I am curious to see what happens. But here's what I mean. If you want to buy this, if you look in the very middle of my screen here, it says, I'm aware of the flipping policy. You're not allowed to sell your shares for 30 days or you can't buy future IPOs, which is unfortunate. So, and what a lot of IPOs are doing right now is purposely underpricing the market cap and going at a valuation that where as soon as they IPO, they're going to rocket up like the same day. We've seen that happen a lot recently with Bullish and some of the other IPOs like CoreWeave. So let's see, 2 new ones on your list. Thoughts on the recent insider share? I'm not sure what you're talking about there, H. What stock you talking about? I'm going to flip till they ban me. Hey, yeah, you should do that, Fitzgerald. Why not? How about Corning? What's the ticker symbol for that one? I know this is a cool stock. Wow, this company is at an all-time high. Oh, yeah, Plasma. We'll look at GitLab after this. So, yeah, here's Corning, though. I did some research on GitLab. I heard they don't have great management, but here's Corning. They're a $60 billion company at all-time high. So they're in optical communications, display, specialty materials, automotive, life sciences. I love how diversified their revenue streams are. Let's see, optical communications. Well, yeah, that business has hit a record up 40% year over year. So that might be why the stock's at an all-time high. Display revenue, that one fell 11%. Let me see. Yeah, this is the analyst expectations. That's the orange line there. They beat like crazy on revenue, beat like crazy on net income and on EBIT. So it was a triple beat quarter. Sales are up 18, net income's up to 500 million. That's ridiculous. Yeah, up 200% year over year. I can see why they're at all-time highs. What app are you using? Yeah, hey, this is a brokerage right here where you buy stocks. If you want to get it, it's in the link tree in my bio. The very first link there, it's an affiliate link to full disclosure. But check this out. Here's GitLab. They were up 5% on Friday. So they're recovering from the huge red candlestick that they had. So that's good news. They did have a nice little recovery. So they're almost back to where they were before they reported earnings. So let's see how they did. So they actually beat on revenue. They beat on net income and they beat on EBIT. So that was a weird thing. They triple beat on the actual numbers and the stock fell nonetheless. I heard this company also has like no real competition for the space they're in. Yeah, sales are up 29. They did still lose net income, but that was less net income lost than analysts expected. So that's interesting. That might be why the stock's recovering a bit. Maybe this was oversold is what that's really pricing in right now. But yeah, someone said Cameco. Yo, if we go to ticker symbol URA, that's actually my favorite uranium stock. So, like if you look at ticker symbol URA, this is the uranium ETF. I think for the uranium industry, you want to really pick and choose some individual stocks for the industry. And I think one you should pick and choose is ticker symbol CCO Cameco. This is a Canadian company, so we'll convert their currency to USD. But my favorite uranium play, because they have real growth. The sales are up 47%, lots of sales. They're making a lot of net income, near 300 million just this quarter. Really strong balance sheet, deleveraging the balance sheet. Cash flows are really strong. So out of all the uranium stocks, and I've looked at near all of them, this is my favorite pick. Because uranium right now is what powers nuclear reactors, and nuclear reactors is really favorable in the executive orders and stimulus and everything. So I am bullish on nuclear. It looks like they're not too bullish for subsidies on wind and solar. Okay, so hey, what's up? I believe UiPath reported good earnings. What do you think? Yo, UiPath is my biggest loser right now. We are down 46% on that stock. So I like being fully transparent. So do beware. I'm not an expert. And yeah, UiPath did report earnings. I'm down 50% on them. Let me see. So they beat on revenue. They beat on net income loss expectations, and they beat on EBIT. So it was a good quarter. They did triple beat on every metric. So that's good news. Revenue was up by 14, and they should have just barely broke even, or they made 1.5 million. So that is good news. These year-over-year trends are getting better, but I still wouldn't buy UiPath, I'm personally not buying more of this company. I'm kind of looking to sell out of UiPath, but yeah, I believe they got no debt. They got 1.45 billion of cash. I know they're doing buybacks. Let me see. So yeah, they spent 100 million on buybacks this quarter, 200 mil last quarter. But yeah, I'm not. I'm glad to see them go up, but I'll be super careful with them. Someone said Visa, and hey, what's up, Barella? What up, Mark? So Visa is actually a stock owned by a lot of popular people like Nancy Pelosi, Warren Buffett. Yeah, Visa is a chunk of Nancy Pelosi's portfolio, but this is a great buy and never sell dividend growth company. Those small little credit card transaction fees that are slowly bankrupting us are making Visa a lot of money. Check this out. They legit make over 5 billion of after-tax net income a quarter. So what is Visa doing with 5 billion a quarter of extra money? Well, they're actually spending a lot of that on share buybacks, just buying back their own shares. I love companies that do this. If you look at my portfolio specifically, a lot of my stocks just do share buybacks with their leftover money, and they're spending 4 to 5 bill a quarter buying back their own shares. Here's the actual benefit for you as a shareholder. The net income is up by 8%, but the net income per share, the EPS, is up by 12%. So that's because the share part of the ratio went down. Pretty cool. Buy the Microsoft dip. Tilray, I reckon. Yeah, hey, I'd be super careful with Tilray. You know what? Maybe we could check it out. What's the ticker symbol for the uranium stock? Yeah, that was ticker symbol CCO, Cameco. They are Canadian. It's not Clear Channel Outdoor. That's a billboard company that's pretty much going to go bankrupt because of their debt. But yeah, ticker symbol CCO, the Canadian stock. They are pretty much at all-time highs. I wouldn't chase them. I wouldn't buy them over 100 a share. But okay. So buy the Microsoft dip. Let's check out Microsoft. I love this company. It's a Mag 7, another stock you should just buy and never sell. According to S&P Global and Moody's, Microsoft is a safer investment than buying the US government treasury bonds. So I like them because they have three main segments of business: the productivity and business solutions. Think OneDrive, Office 365. That is over 120 billion of annual revenue for them, just that business. And then they have their rapidly growing cloud business, their intelligent cloud, Azure cloud business. It's at a new record this quarter, up 25% year over year to $30 billion. That's a record quarter. So cloud business is growing like crazy. They just print money. I mean, this is after tax net income, 27 billion just this quarter. They're easily making over 100 billion a year. Just ridiculous. You also get a nice yield, 0.7% yield. They're also doing buybacks. So Microsoft's another stock. You just buy them and never sell. You don't really trade that stock. So yeah, they're cool. But let me pull up TLRY. I feel bad if you own this one because the chart. Oh, hey, actually, they have had a nice little rally the past couple weeks here. But when we zoom out on them, what was the thing? This used to be a $145 stock, and now it's $1. So they're in this industry. I can't say this word on TikTok and cover them, but here's the part that, it's concerning in my opinion. So first off, the sales are down year over year. The lifeblood of the company, the revenue is down by 2%. And I don't know how this is possible, but they lost $1 billion this quarter. 800 mil last quarter, 85 mil this quarter. And guess how much the whole company is worth? 1.3 billion. So kind of think about this logically here. They're a $1.3 billion company that lost 1.3 billion of net income this quarter, 800 mil last quarter. I think there might be real bankruptcy risk here, all for a business that declined 2% year over year. Dang, so whenever you have huge net income losses like this, that money has to come from somewhere. And look what that did to their assets. Just depleted. Went from 4 billion the same time last year to only 2 billion. So I wouldn't buy that one, to be honest with you. What app is this? Hey Nick, I'm on a brokerage right here where you buy stocks. It's my favorite one. If you want to get it, it's in the link tree in my bio, very first link there. Hey, what up, Jin Tajayan? Or I probably said your name so wrong there, Din Chajan. But what's up? Hope you're having a great Sunday. He said NAGE stock. So this one is on my watch list. And they're very small, so do beware. They're only worth $750 million. So that's a very tiny market cap. But here's why I like them. Out of all the $750 million companies out there, I like this one because they're actually net income positive, making net income every quarter. So in the past year, they've made pretty much 20 mil of net income. It's pretty good when you're only worth 70 million or 700 million, and they're really growthy. Sales are up 36% year over year. Very solid. 3.6 million net income. Balance sheet's growing. They're deleveraging. Everything looks great here. Where do they sell their product? So 75% comes from the US. They're beating on the analyst expectations, and revenue is expected to keep on climbing up. So NAGE is pretty interesting. But do beware, they're really small. I wouldn't have them as a huge position. Pick me Adobe. Hey, I saw that. Hey, let me get to Adobe. I saw that one first at the top. And yeah, then we'll get to Lululemon, CASY. Yeah, I'll try to get to all the stocks here. And Applied Materials as well. Let's do it. So here's Adobe stock. I think this one has just been oversold from the AI thesis that, I know someone that just made a great logo on ChatGPT. The thing is, we might not need Photoshop in 10 years from now. So the future's uncertain, but I think this is way oversold. The financials look great. I think as much as AI is good, humans always need that final touch. And I think that they're still going to be needed. And I'm on an Adobe product near every day. But yeah, the sales are up double digits, revenue's up 10%. And check out the after-tax net income. This is very solid. They're making 1.7 billion of net income a quarter plus. And also the free cash flow is even better. They're making over 2 billion of free cash flow every quarter. And guess what Adobe's doing? Since they don't pay a dividend, what are they doing with this extra 1.8 billion of net income a quarter? They're spending it all on share buybacks. And here's what that does for you. Net income's up 7.5, but net income per share is up 12.9 because there's like 4 or 5% less of the shares that exist since a year ago. They know the stock's undervalued, so they're buying it back. So I do like Adobe. I do not own them though. Okay, let's look at CASY. What is this one? Casey General Stores. Oh yeah, so this is like a grocery store. Yeah, Casey's General Store. They're not too big. They're an $18 billion market cap. They're at all-time highs. I mean, look at this stock price. This looks like Nvidia. Pretty crazy. Uh, it's usually the boring stocks that do really good. Like Walmart's done amazing. And they're just a boring grocery store. But yeah, it's probably this net income that investors like and the net income growth. They're making easily over 100 million in net income a quarter. Sales are up by 10% year over year. What are the margins here? 2 to 5% net margins. That's normal for a grocery store. So yeah, I think just investors. Yeah, and you get a nice point or 0.5% dividend yield. Investors just really like the grocery stores. Like you pull up Walmart as well. I mean, Walmart looks like Nvidia as well. So sometimes it's the boring stocks that do really good. And those that industry is also recession resilient because people still gotta go to a grocery store in a recession. So let's look at AMAT. This is a value play right here. I've looked at it like this. What app are you using? Yeah, hey, it's in the link. This app I'm using. It's actually a brokerage. It's in the link tree in my bio. The very first link there. It's my favorite one. So, that I recommend. Lowest fee brokerage, most useful. So anyway, here's AMAT Applied Material. And I have a Webull account, I have a Robinhood account, but Moomoo's my favorite one. This one right here, link tree in bio, first link. But anyway, most useful one, lowest fee. So this is Applied Material. They're trading, they're a semiconductor play. That's most of their revenue. They're trading at 19 times net income. And for the industry, you look at AMD, Nvidia, Broadcom. This is pretty cheap for the industry, and they make a lot of money. 1 to 2 billion of net income every quarter. You get a very nice yield, over 1% dividend yield. They have a small payout ratio, so they actually have room to raise their dividend, and they've been doing that every year. You can see the dividend went from 86 cents to $1.44, so the dividend's nearly doubled in 5 years. So Applied Materials is cool. They did gap down on earnings, though. I wonder if they had bad guidance. What's up? Can you go over UNH? Yeah, we will cover UNH. Let's do it. So United Healthcare is a company that was just bought up by Warren Buffett. If we go to Buffett's most recent moves, his newest positions right here, he bought 3 new companies in his most recent filing. He bought UNH, ALLE, and LAMR. And Warren Buffett, he doesn't buy a stock unless he does a lot of research on it. He does his due diligence, and that's why the stock rallied up so much. So UNH gapped up solely on the news of Warren Buffett buying the stock. He actually bought it around $320 a share, lower than even where it's at today. That being said, I wouldn't touch UNH over $300 really. I wouldn't put any meaningful amount of money in UNH over $300 a share. I just have a scary gut feeling they're going back under 300 because there is a lot of future uncertainty. The net income is expected to collapse another 50%, going from $6 to $1.70 of EPS. That $1.70 of EPS won't even cover the dividends. So, but that's also why that's being priced in. Analysts expect that. That's why the net income multiple is 13 versus its historical average of 25. So that's kind of being priced in right now. But all that being said, I wouldn't touch on one over 300, and I wouldn't make it a meaningful size position. But it is really interesting to see Buffett buy that stock. All right. SHOT, please. What up, Garrett? And hey, Connor. What's up, Connor? Thanks for the shares. So here's Safety Shot. Yeah, we don't really cover these kind of stocks on the channel. So if you look in the top right, they're only worth $64 million. So the stock's at an all-time low, only worth $64 million. Do they even have any sales? They had sales of $44,000, down 93% year over year. So to be honest with you, they lose net income every quarter too. It says they made net income this quarter. They didn't actually. I wonder if they sold an asset or what happened there. I don't know, but some gap net income trick. I wouldn't touch that one to be honest with you. Super small. So I do want to look at a SoFi stock as well. Oh yeah, by the way, the market opens in 4 minutes. So wait 4 minutes from now and we can see how stocks open. Oh yeah, Pierre, what's up? He said Lululemon. I wanted to cover this one as well. And hey, what up, Tangrika? Yeah, we'll check Robinhood stock because they just got added into the S&P 500. Hey, what up, Alex? We'll look at SoFi. Do you invest in any ETFs? We'll look at my favorite ETFs too. What up, agent? So here's Lululemon. They fell 19% on Friday. And it was because of disappointing North America sales. And they actually beat on the international revenue growth by a good margin. But the North America sales only grew by 1% year over year. So the North America sales didn't grow as much to even beat inflation, but the international business grew 25%. So when you blend those two together, total sales are up by 6.5. So sales are up by 6.5, but the net income did fall by 5.6, which means in English, that means the margins fell. Net margins fell 11% year over year, not great. But I think the brand is also suffering a little bit. But I think this one you could probably look to at buying around a 10 PE. I feel like it might go a little lower, sadly, but they poorly timed a lot of share buybacks. So if we go to the actual share buyback program, this is all before today. So all the money they spent before today could have bought back at least 20% more shares if only they waited. But that's what I like about the company, the fact that they're buying back their own shares. I almost prefer them to reinvest in the business, maybe buy a company, do something. But the net income fell by 5.6, but the net income per share only fell by 1.59. So that's the power of the share buybacks, which were poorly timed. But they're struggling. The quality of the products have gone down. Okay. Yeah, I'd be careful with them. So let's look at SoFi, and then we'll look at how the market opens here. And do you invest? I actually do not own any ETFs, but I love the S&P 500. I love the NASDAQ 100. I love the Dow Jones 30 Industrial. Those are my three favorite picks. Ticker symbol VOO, QQQM. So here's SoFi Technologies. And, the market opens in 2 minutes. We'll see how the market moves. But I do own SoFi, by the way. I regret every share I've ever sold at this company. I've held them for many years, like 3+ years at this point. I remember buying them way, way, way back here. So yeah, this is a fintech right here, SoFi. They have their own banking charter. They got it through a loophole. And check this out. This is the part that makes it justified for them to be over $25 a share. Not even I expected this kind of growth. So the financial services here are up 105% year over year after growing 80, after growing 222. The growth is just continuing to grow. It's insane. I mean, they created this business in 2020. It was no revenue, 4 mil, 2 mil. Now it's 360 mil just in the most recent quarter. So that business is booming. The lending revenue at SoFi is up 30% year over year, also to a new record. And then their small little technology platform business is also growing to a new record, up 15%. So people are just really starting to take SoFi serious. They're net income positive. They made $100 million in net income this quarter. The sales are up 42% year over year. So for those reasons, I really like SoFi, and I think it's justified for them to be at $25 plus. I wouldn't buy them though right here. They do seem a bit expensive, but I wouldn't be shocked to see SoFi continue to climb up. Thoughts on Lyft? Oh yeah, I saw Lyft. What up, Bongo Clark? What's up, Plasma? Francisco, Jeremy. Good evening. What do you think about Klarna? Yeah, we'll look at Klarna too. Klarna is really interesting with how good Affirm has done recently, another buy now, pay later company. But here's Lyft. This is an Uber competitor. They're honestly, they're the most justifiable buy they've ever been because they're finally profitable. Check this out right here. If we zoom out, they used to burn through a couple $100 million of net income a quarter, but now for the past 3 quarters, they're making net income every quarter. And the analysts are expecting them to continue this net income positivity pretty much for the rest of time. So they're finally profitable and are going to stay profitable. The free cash flow numbers look great here. And people just like doing Ubers. And I wonder, does Lyft do Uber Eats kind of where they deliver food? I don't know. But yeah, Lyft is interesting. There's also rumors Tesla might buy them. I don't know. That'd be very smart for Tesla to do with the robotaxi network. But yeah. What do you mean market opens at 4 minutes? So yeah, the market did just open at 8 p.m., the overnight market. So let's see, if I wanted to, I could sell all my shares of Google if I wanted to, or I could buy shares of Google right now if I wanted to. So yeah, let me see how the S&P 500 is doing. The SPY is up 0.22%. Qs are up 0.3. This is good news. Market should be green tomorrow. And no way, hold on, let me pull up this account, Robinhood should be up like crazy when I click this. Yeah, Robinhood is up 7% right now. If you're wondering what's up with Robinhood, they just got added into the S&P 500. So there's going to be so much passive income going into Robinhood. Is every month people set money aside to retire and put in the S&P 500, invest it. Some of that will go into the Robinhood stock. Should I buy SoFi? I would buy SoFi, but not at that price, not near 25. I wouldn't chase it at this price, or at least not a meaningful amount of money. Hey, what up? Cool Hand Luke said MRCY. What's this one? Mercury Systems. So let's check it out. And then we'll look at the Klarna IPO. So here is, someone said, I hope this ain't true. I sold my house and put it on the Klarna IPO. I'd be super careful with that one, but we'll check it out after this. So here's Mercury Systems. They're a $4 billion company, and they apparently had some really good earnings because they gapped up like crazy on their earnings report. Let's go see what they reported versus what the analysts expected. So that's probably why. Checked it out. Analysts were expecting 244. They reported 273. A major beat on net income. Analysts were actually expecting them to lose net income. Well, they had a huge surprise and made net income, and a huge beat on EBITDA as well. So the sales were up 9%. They made $16 million in net income, and that was real. This wasn't some one-time gap net income trick like we see other companies doing. That was real net income that they made. So that's why they gapped up so much on earnings. They're narrowing their losses. They're making money now. So great. I see why they gapped up so much. So here's the Klarna IPO. Let's check it out. And hey, we're up 0.19% right now. Roth IRA is negative. But yeah, if we go to the IPOs, so here's all the IPOs recently that are about to IPO. Gemini, Figure, and Klarna. This is the buy now, pay later stock. If we look at ticker symbol AFRM, this is another, basically their biggest competitor. Ticker symbol AFRM, Affirm, another buy now, pay later stock. They have been growing like crazy, had a phenomenal earnings report. Sales are up 33% after growing 50%, and they made net income on that when they used to lose a lot of net income for a while. One thing, do beware, I don't know if your brokerage does this, but if you buy before they IPO, check this out. If you look in the middle, there's a flipping policy. You can't sell your shares for 30 days or you'll be restricted from future IPOs or something. What we're seeing recently a lot happen is a lot of IPOs purposely underprice what they IPO as. That way they just rock it as soon as they IPO. We saw that with CoreWeave, Bullish, Figma, some of these other ones, which have trended down. What we see a lot of IPOs is they initially rally up and then slowly bleed down. So yeah. Yeah, I would definitely be diversified and not be all in a buy now, pay later stock. Those buy now, pay later companies will get smoked in a recession. People just won't pay back those loans and they're going to end up holding the bag. They originate the loans. What we're seeing with the firm is they actually sell the loans too. Okay. Yo, Maybet said, check out Rich Tech Robotics. Yo, he said, all right, Rich Tech Robotics is not a great robotics company. If you've ever looked at them, out of all the robotic stocks out there, if you're just going to buy, if you want to trust, out of all the robotic stocks to bet on for the long run and for the future, I would not trust Rich Tech Robotics personally. They're a micro cap with no patents, no IP. They have a partnership with NVIDIA, but there's no real gain in revenue for them. So, okay. We might check them out later. Someone said, into tech drones, check out ONDS ticker. All right, let's do it, man. ONDS. So this is Ondas Holdings. They've had a nice rally recently. That is interesting. They're a $1.5 billion company. So do they have sales? Let's check it out. So they do have sales. They had, but not much though, $6 million of revenue. But analysts are bullish on this. The revenue is supposed to go from $6 million to $9 million in 2 quarters. But again, it's still really small revenues. Yeah, they're not losing that much money. They're losing $10 million in net income a quarter. They just beefed up their balance sheet. Did they dilute you to do that? So yeah, they barely. They diluted you by $50 million. That is pretty significant when it's like 3% of the company, but they look like a momentum company. Which robotic stocks would you pick? Yeah, I would pick ticker symbol SYM. This is a warehouse robotics company that has a huge partnership with Walmart. And Walmart's their largest customer, and Walmart likes them so much that Walmart took a stake. They own 14% of all the shares. They have like over 1,500 patents. And obviously, my favorite robotics company that's not obviously a pure play, but they're the number one robotics company in the world. They have the money and the talent. They're the leader. Is Amazon. Here's my AMZN. They're not a pure play. Hey, what up, Mo? Good to see you. I just started investing this year. Haven't paid taxes. Um, uh, I'm not sure. I'm not sure your personal situation there, but let's see. RBRK. What is this one? RBRK. That is Rubrik. Okay, this is that software company. This is a super growthy software stock. So check this out. If we go to the revenue right here, the revenue is up 48% year over year. So it's up 50% year over year after growing 38%. The revenue just hits a record every quarter. But one thing to be aware of, they're losing a bit of money. Like they're losing 100 million in net income a quarter, and they do have a bit of debt. But honestly, at this growth rate, this is so impressive. I do really like Rubik. They're on my watch list. I'd like to get exposure to this one, but at a much lower price. But yeah, revenue is expected to just keep on climbing. They're beating expectations on. Oh yeah, even though they have been losing net income, analysts were expecting them to lose this net income, and they're beating on the net income losses. So that's why the stock has been such a nice performer. They're super growthy. All right. Thanks for the no problem, Martin. So Inda said, check out XOM. How about Palantir? Oh, actually, let me look at Palantir. What up, Burned? So here's Palantir. This is a great stock, but I cannot pay its current valuation. I'd love to own this stock, but not at this valuation because right now they traded 105 times revenue. So, not 105 times profits, not times after-tax net income, but 105 times revenue is really expensive. But here's why they have a high premium. Here's why they might deserve it. They're super growthy. If we look at the government revenue, a lot of police stations use Palantir software. It's up 50% year over year after going 22, after going 15. Like the growth rate is growing here. You can just see the revenue's at a record on the government business, which is half the revenue. And then the commercial side of business with S&P 500 companies like Google, mom and pop shops, that business is also up 50% year over year. They're just so growthy. I can't believe it. And not just the revenue's growing. They had their first ever billion-dollar revenue quarter, but they made 330 million of after-tax net income on that. They have incredible margins, 33% net margins, an absolute fortress of a balance sheet on Palantir. They actually have no debt at all and 6 billion of cash, up from 4 billion. So Palantir is just a beast, my guy, but I would not touch him at this current valuation, 105 times sales, but they might always just permanently stay at a high PE. That does seem to happen. What up, Jeremy? He says LDI looks promising. Is that Loan Depot? So yeah, this is your mortgage company. They do mortgage loans, and they rallied a bunch on the news of going into a lower interest rate environment. I wonder why they rallied up so much. 26% seems crazy. Yeah, so the future growth is expected. I wouldn't probably touch it at this price, but yeah, this is basically just a mortgage lender, and as a bunch of people, refinance their mortgage loans in a lower interest rate environment, they should boom and collect that. Well, we're also seeing, Rocket Mortgage. They've had a nice little rally. Yeah, Rocket Mortgage has been crushing it. My favorite play is honestly Mr. Cooper, which I think is being acquired by, wow, look at Mr. Cooper. No way they're over $200, dude. Yeah, Mr. Cooper's at an all-time high. Okay, I think they're getting acquired, though. So what stocks are we looking at? We're just looking at a bunch of different ones. By the way, the market just opened. Let me give you a quick portfolio update. We are up 0.18 in the S&P 500. Whoa, the Qs are up 0.41%. We might have a really green day tomorrow. Yeah, Apple's up 0.4, Tesla's up 1, Robinhood's up 8.5. So pretty interesting. Let me check out my Webull account. We do own Robinhood. Yeah, we're up 8.5% on Hood. Anything down right now? Yeah, UiPath is down. Zoom is down. So anyway, let's get back to looking at stocks. Okay. RXRX when you get the chance. So that's actually a stock owned by NVIDIA. So if we go to the Scorpiana, thanks so much for the rose there. I do appreciate that. So here's a company in the NVIDIA portfolio. As you know, NVIDIA has to, of course, make all their holdings public. But one of the stocks they own is ticker symbol RXRX. And again, just because NVIDIA owns a stock doesn't mean you should. And if I go analyze this stock financially, to be honest with you, this is not a good company. Now, I can see why they're close to this all-time low level. I would stay away. I'd look at other stocks, but they're a $2 billion company. So kind of remember that in the back of your head. You're buying in at a company at a $2 billion market cap, and you're buying a business that lost 200 mil this quarter, or just nearly that, which is 10% of the company. If you lose $200 million like they did last quarter, that's 10% of the entire market cap. 190 mil this quarter, 180 mil this quarter. So, and they're losing all this net income all for a business that the sales are 19 million. So personally, I get NVIDIA owns them, but from a financial point of view, those net income losses scare me, and there might even be some real bankruptcy risk there if things don't turn around soon. At this rate, if things don't change fast, it looks tough. So here's a cool chip play. This is one of the cheapest chip plays out there. This is Marvel Technologies. They're trading at 22 times forward net income. So a very low multiple for the industry. And by the way, next quarter is super important to look at. Here's why I'm saying they're trading at 22 times forward net income. If we zoom out, this company used to lose a lot of money. You couldn't buy the stock. They were burning through a couple hundred mil a quarter, but now they're making a couple hundred million a quarter. And this 200 million of net income is the same as 22 cents of EPS. And check this out. The EPS next quarter is expected to go from 22 cents to $1.50. So next quarter is going to be super important. I can't wait to see what happens. So I think they're worth looking into. I wouldn't make them as a huge position. Broadcom might be the safer play, but that is interesting. Do you in long-term invest or trade? I long-term invest. Yeah, if you look at this portfolio specifically, if you look in the top left, it's called buy and hold portfolio. Once I buy a stock in here, I try not to ever sell it. Taking request, yeah, if you got any stocks you want me to look at, let me know in the chat. I try and get to all of them. I try and go pretty fast here out of respect for everyone. Looney, good to see ya. Happy Sunday. Yeah, by the way, if you wanted the follow button, I go live every Sunday at this exact same time. I go live every day, but Sundays are where I stream the most. I do 2 streams every Sunday. By the way, I sell nothing. I have no course, book, Discord, WhatsApp, Telegram. I sell nothing. Watch out for that. So I'll never follow you or DM you. So let's keep going here with the stock analysis. Someone said, what MRCY? What is this one? Oh wait, we just looked at Mercury Systems, so I'll be super quick. Basically, they had an incredible earnings report. This is why they gapped up so much on that day. That's the day they reported earnings. It's because they triple beat on every expectation. Analysts were expecting them to lose net income, but they came out and made a boatload of net income. And this wasn't some gap net income trick adjustment. This was real net income that they made. So it really was a great beat of a quarter, and that's why the stock went up so much. So Slayer, what's up, man? He said IREN. This is like a better play than CoreWeave, in my opinion. It's tough at this price, though. Over 25 really is, I wouldn't pay over 23 really as a meaningful size position. But here's IREN, Iris Energy, and here's why they deserve to be at this price. If you're ever looking at a stock and you've seen them have this insane rally right here, usually the insane rally can be explained by looking at their financials. And look at this growth. This is what justifies that insane appreciation. The sales are growing like crazy. The revenue is up 230% year over year after growing 104%. And on this 187 million, they're actually profitable. They've made net income for the past 3 quarters, and they have a really good balance sheet. No cash from operations number. That's weird. Okay. Anyway, IREN, I can see why they're doing so good. I do like them. They're a data center hosting business, and I think they do some Bitcoin mining as well. All right, what is this one? GEMI. What's this one? Hey, Joe, we legit just covered Palantir like 5 minutes ago. If you want to rewind and watch that, feel free, but we'll check it out in a couple minutes if you want to wait, Joe. So here's remind me to relook at it. But here's GEMI. This is that crypto exchange, basically. They're IPOing at a market cap of $2 billion. So just know it's a very small company, $2 billion market cap. Beware of that. Oh yeah, I guess there's already comments we can read for, or these are the comments on just this app right here. So anyway, oh, are there financials we can look at? There is. So it did 68 mil of revenue. When they IPO, they should raise a bunch of funds and pay off a bunch of debt. I'd be careful with that one, but they are an IPO. What we've seen with a lot of IPOs is they rally as soon as they like the minute they IPO. So someone said DOOR. I look up DOOR, and that stock I cannot find. Are you talking about DoorDash? I don't know. Any tips on rebalancing your portfolio? Yo, just buy whatever you know is the right thing to do. Buy quality. It's tough, buying a lot of stuff right now with the market at all-time highs. So here's what the real advice: find a bunch of stocks that are quality that you'd really want to own. Put them on a watch list and just watch them until they're at a good valuation you want to pay. Here's my never sell watch list. Some of these I wouldn't want to own right now, but these are a lot of the stocks that I'm heavily watching to like buy. I own a lot of these, but oh, dude, Ferrari has been crushing. I'd love to get exposure to Ferrari. Ferrari's at an all-time high, and they pay dividends. Yeah, no way. Cover Systems is up 3. I'd love if that was true. Okay, let's keep going here. Someone said, ooh, Oracle. Would it be better to get options on open or just buy regular stock? You know what? For open door technologies, this is one I wouldn't really touch, to be honest with you. It's kind of a momentum. It's pure momentum right now. What this company does is they flip houses. They're super interest rate sensitive, so do beware. And that's really why they're rallying up so much. There's a 90% chance we're going to get interest rates cut this month. Yeah, so this company flip houses. They're not really great at flipping houses either. But look at what happened in 2022 in the zero interest rate environment. The growth was nuts, 4 to 5 bill of revenue a quarter. But then look what happened in 2023 as rates hiked up. The sales collapsed, down 70%, down 69, under $1 billion. And the analysts aren't too happy with the revenue numbers either. Like the revenue is supposed to go to 500 million in 2 quarters. So they do still lose net income every quarter, but the losses are narrowing. They did cut. This is mainly almost solely from cutting a bunch of headcount, firing a bunch of people. But yeah, a lot of this one's been super momentum-y on the news of basically a 90% chance of an interest rate cut. Also, I think there was like the CEO quit or something. I don't know. They're just super momentum-y right now. I wouldn't touch them. But if you did touch them, I would do it as, something I trade. I wouldn't just buy and hold that one for the long run, expecting them to, be like the S&P, super consistent. I wouldn't buy and hold them. All right. Hey, sorry, I'm drinking water here. Looney, shout out to the member Looney. He said ARM stock. Yeah. So that's actually a company owned by NVIDIA. So if we go to the NVIDIA portfolio, NVIDIA actually owns a bit of ARM, which is pretty interesting. And this company has some pretty good margins because a lot of the revenue they receive, I think like 60% of the revenue is their royalty revenue. Let me check their gross margins. Yeah, bro, 97% gross margins. That's better than Reddit. And they do make net income every quarter, easily 100 to 200 mil of net income a quarter. Actually, I wonder if it'll break it down. Like if I go back far enough. Oops. Yeah, so look at this. 67% of the revenue came from the royalty streams and then the license and other revenue business. This one I could never find at a good valuation. I mean, they're always trading at a ridiculous premium, but they deserve it because they're really great. Honestly, ARM is a stock I would love to own. They're the energy efficient chips. I would love to own them, but at a way lower valuation. Hey, what up, Free? This is a stock I really like. AVAV. This is Aero Environment. They've had a nice rally recently, and they're off their all-time high. So that's why it's finally looking interesting because they're actually, you don't feel great about buying stock at an all-time high, but this one finally is looking decent. They're an $11 billion market cap, and let's see. So, oh yeah, they have this is so funny. They have these loitering munition systems revenue, and it has exploded. It's legit up 87% year over year after going 73, after going 110. I mean, you can just see the trend here. So for some reason, the loitering munition systems business is booming. Also, they have uncrewed systems business, whatever that is. Anyway, It's that growth that has led, like, the sales are up 39% year over year. That's incredible growth, 39%. They made net income on this quarter too. So, in a phenomenal balance sheet on AVAV as well. So, AeroVironment's an interesting one. I'd put them on the watch list maybe. What happens is, yeah, hey, Finn, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, first link there. Thoughts on Hood and the S&P 500? Yeah, yo, I do own Hood. Let me show you. Yeah, they're my biggest performer. And the market is open right now. We're up 0.61% on the day. Here's my total percent lifetime return. We're only up 16% in this account, but Robinhood is booming, up 8.5% solely on the news of being added. And you can probably guess the second they got added into the S&P 500 where that happened. But yeah. I wouldn't buy them at this price, but that's great news. That's so much passive money. Every time someone gets paid every month, they put money into their retirement account in the S&P 500 index. Some of that money goes to Robinhood. All right, so Open Doors running overnight. I bet they are. All right, so if you want a weird one, FMCC stock. What is FMCC? Freddie Mac. This one's at an all-time high. I actually haven't heard of this stock before. They're a $7.7 billion company. They had a nice rally recently. What's the multiple on this? So single family, multifamily. So it looks like maybe a real estate company, like single family homes. That, again, we're expecting an interest rate cut, 90% chance this month. So that's probably why they're rallying so much, like Open Door is. So someone said thoughts on Rivian. Yo, Rivian I'd stay away from buying individually. Amazon, I would just buy Amazon stock, because if you own Amazon, you still technically own some Rivian. If we go to the largest shareholder of Rivian, it's Amazon. They own 13% of the shares, then 12% of the shares are owned by Porsche. So they're kind of backed by Amazon and Porsche, which is pretty interesting. Has anyone seen those like electric Rivian Amazon delivery vehicle trucks? They're pretty nice looking. They look pretty cool. But here's the bad news. Here's why I wouldn't buy them individually. Like, this company legit lost over $1 billion of net income this quarter. Did they dilute you? Yeah, they issued $750 million of stock this quarter. So they lost $1 billion in net income this quarter, 600 mil, 700 mil, another $1 billion. So those net income losses scare me, especially when you're only worth 17 billion. Yikes. So that's why I'm just staying away from that stock. I like to really buy profitable companies. Like, they're so far away from profitability. Like, you can't see the light at the end of the tunnel yet. That's why I think the stock has been at all-time lows, while the S&P is at all-time highs. So, hey, what up? Yes is real. Or BSX stock. Let's see. This is Boston Scientific. Yeah, this is that stock at an all-time high. So, congrats if you own this company. You got to be up on your position. Let's go see why they're at all-time highs. So yeah, they have this cardiovascular business, and it's booming. It's up 23% year over year, after going 20, after going 15. So the growth rate's growing, which is great. Record quarter on the cardiovascular business. And they have this med surge business, which is up 15% year over year, after going 11, after going 11. So super growthy business that's not just growing the revenue, because the revenue is up by 22, but the net income is up by 150% year over year. That means they're expanding their net margins, now a 15% net margin, when the same time last year they only had a 7% net margin. That's crazy. Like Coca-Cola sells 1 million bottles. If they can make 1 extra cent on every bottle, they're making a boatload of money. So this margin expansion is incredible. So I can see why this one's at all-time highs. Congrats if you own them. Rivian are cool vehicles. Yeah, I agree. Hey, what up, Phil? He said BJ stock. Yo, is this BJ wholesale? So yeah, this is a grocery store, kind of like a Walmart, a Kroger, a Costco. Yikes, it looks like they gapped down on earnings. So they reported numbers investors didn't like. Let me go see what that was. So, yeah, that actually wasn't great. Look at that huge miss on revenue. So the orange line's what the analysts expected. They missed on revenue. They did beat on net income, and they beat on EBIT. So actually not too shabby. But the revenue growth did disappoint. Sales are only up by 3.3, but still they're making 150 million plus in net income a quarter. What's the multiple? Yeah, 22 times net income. That seems pretty fair. What's the industry average? Industry average is a 37. Yeah, Costco trades ridiculously expensive. So and Walmart too. Well, not Walmart, not ridiculously expensive, but yeah, BJ's interesting. I like Sprouts Farmers Market too. What platform are you on? Yo, what up, Mega Forward? So this is a brokerage right here where you buy stocks. If you want to get it, it's in the link tree in my bio, the very first link there. It's my favorite brokerage, lowest fee, most useful one. Or you can just it's an affiliate link too, full disclosure. If you sign up, we'll actually both get a fractional share of NVIDIA. So check Arista. Hecka up for years. Is that, wait, let me type it. Normally, hey, if you got a stock you want me to look at, tell me the ticker symbol, not the name, but I'll look it up for you because I do know this company. This is Arista Networks, ANET. They are at an all-time high. So congrats if you own this company. They deserve to be at all-time highs as well. Check this out. If we look at their product sales, this is 85% of the business. The product revenue is at a record, up 31% year over year. These year-over-year growth rates in the middle are incredible, and it justifies the stock price appreciation. How's the services revenue growing? Service revenue up 22. So both businesses are booming, and not just the revenue, but profits as well. They made $888.8 million of net income this quarter, up 33%. So net income's at a record, sales are at a record, really good balance sheet. So I could see why they're at all-time highs. So Looney said TSM and SoFi and Palantir all the way, two of the top growing companies. Yo, I love SoFi. I do own them. We can look at them after this. So here's Taiwan Semiconductor. This is a great chip play that I absolutely love. If we check out the multiple as well, they're trading at 26 times net income. That's because there is some certainty of like the U.S. government not going to allow Taiwan Semiconductor, they're 6 feet away from China. It's we can't really defend them. We can't depend on them either. So we're probably going to have to move. And if you didn't know, NVIDIA just designs the chips. And Taiwan Semiconductor legit makes the chips for NVIDIA. And there's rumors that they could have to move it to Intel in the U.S. after the investment. But anyway, check out this multiple. That's probably why they're so suppressed. It's just that fear has a high probability, but they're trading at 26 times net income. Pretty fair valuation, 26 times net income. And look at their market share for these 2, 5 nanometer wafer chips. It went from, 61 to 67. So their market share is growing like crazy, and they have incredible net income numbers. They made $14 billion in net income just this quarter, and then $10 billion the previous quarter, 11 bill, 10 bill. So they have so much extra net income, and you get a nice yield, a 1.2% dividend yield, very safe payout ratio, 33%. It's actually lower than that, fair PE. So Taiwan Semi, I love that one. And I think it's fairly priced at 26 times net income. That fear is priced in, I think. All right. Can we look at Zscaler? Yeah, hey, we will look at Zscaler. And Chris said, what app is this? Yeah, hey, again, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's actually a brokerage. It's my favorite one. So yeah, link tree in bio, first link. Or you can just type it into Google. It's just a brokerage called Moomoo. So yeah. All right. Let's see. Can we look at Zscaler? Yeah, let's pull up Zscaler. This is that cybersecurity company. And then we could look at SoFi or Palantir. So here's Zscaler. This company, I believe, got added into the S&P 500 recently. Here's what I like about this stock. Check out just the sales growth. The sales hit a record every quarter, every year. If you look at it on an annual basis, this is the trend you really want to see for a growth stock. We want to see them continuing to grow their sales year after year. One thing to do be aware, though, they are still losing money, but they're barely losing any money. So it's nothing. And they only lost 17 mil. That's nothing for this $45 billion company. Sales are up 21% after going 30, after going 40, after going 50. So the growth is insane. So they're kind of like a Cloudflare. All right. So let's do SoFi. I do own this one. Let me see how they're doing in the overnight market. Yeah, look at Robinhood, man. Robinhood is up 8.4% right now. My biggest winner stock ever. I think SoFi's down, though. Oh, no, it's not. Where is SoFi? SoFi's up by 0.12%. Let's go here. I'll show you my position. It's one of my biggest winners. We bought SoFi many, many years ago. We're up 330% on them. I regret every share I've ever sold of SoFi. We bought this stock years ago, I think it was right here. Yeah, so SoFi, they got their banking charter through a loophole, which is pretty crazy, and then they patched it at right after. So look at this financial services growth. Here's why I think it's justified. They're at $25 plus. I wouldn't buy them here though, but the sales are up 105% year over year after growing 80, after going 230. The growth, as you can see, it's just great. And people are really starting to take SoFi serious. The sales are up 42% and they're making a net income. They made $100 million of after-tax net income this quarter, $70 million last quarter. And, they used to lose net income every quarter. You couldn't buy the stock back there. So SoFi has just really beat the analyst expectations on the growth. And the cash flow numbers are great. Wait, let me see. Cash flow, they're investing in the business. You don't really look at cash flow for this fintech in the banks, but yeah. Ooh, someone said thoughts on Nebius. Would you buy right now? That's a company that's owned in the NVIDIA portfolio. So if we go back to the NVIDIA portfolio, 3% of their portfolio is in Nebius. And again, just because NVIDIA owns a stock doesn't mean you should. You should always go do your own research on it. And when we go do our own research on Nebius, all I see are great things. Like, check out the growth. They did $105 million of revenue this quarter. That's a 7x increase from the previous year. They only did 14 mil this same time last year. Now it's 105 mil. And the analysts are expecting it to keep on continuing to grow. 105 mil this quarter. It's expected to be 262 million in 2 quarters. That's ridiculous growth, and that's why I think they gave good guidance on this quarter too when they reported. So that's what's so interesting about Nebius. NVIDIA does own them. So BJ has the best black iced tea I've ever had. Really, I love tea. So Taiwan Semi's been building a factory in Arizona or Nevada. Oh, I remember that. A big fab in Arizona. I don't understand why anyone pulls money at companies. You don't get it. So hey, you invest in the market. You don't do it to get rich. You do it to preserve and build wealth, to beat inflation. The dollar's down 50% since 2013. So you invest in stocks to just get 10% a year. 8 to 10% a year is what the S&P 500 does. So you start with the $100, goes from 100 to 108, and then you compound it. Then it goes from 108 to 120. Compound that, 120 to 140. It's the compound interest that's the 7th wonder or the 8th wonder in the world. So let's see. Let's go back to the stock analysis. AppLovin. Oh my goodness. TikTok said I'm AFK and have to fill out a CAPTCHA. Okay. I just filled out the CAPTCHA. Hopefully we're back. Okay, perfect. So, Joby Aviation. We'll cover Joby real quick. I don't like this stock, if I'm being honest with you. If we analyze this stock from a financial point of view, I'm not seeing anything too good here. So they're an $11.5 billion company. That's a pretty big market cap. So $11 billion valuation, but the company is a startup. They did 15,000 of sales in the past 3 months. I'm sure someone else in here that has made more than 15,000 in the past 3 months. Are you worth 11 billion? I'm just playing. But look, actually, and that's the weird part. The analysts aren't expecting the revenue to increase a bunch either. That's the weird part. So they have no sales, 15,000 of revenue, and they lost 330 million of net income. That's the tough part. They lost 330 million net income this quarter, 90 mil last quarter, 250 mil the previous quarter. So that's why I just personally stay away from Joby Aviation. And they're also diluting you. Let me actually verify that. Here's how you can see if they're diluting you. You go to cash and financing activities. They issued 300 million of stock this quarter. Oh, but do beware. Actually, this is good news. Toyota Motor owns 15% of the entire company. So they're kind of backed by Toyota Motor. So maybe they see something in them. I don't think they're a buy, to be honest. They kind of remind me of an Archer Aviation. So someone said app. I think you're talking about AppLovin. So, or if you're wondering what app I'm on, it's actually a brokerage, Linktree in bio, first link there. It's my favorite one. But yeah, here's AppLovin. This company just got added into the S&P 500. So that's why they're up 6.5% after hours. Another company that just got added into the S&P 500, was Robinhood, and they are up 8.5%. So we're up $42 right now in the overnight market. Thank you, S&P 500, for adding them. But check this out. Here's what's so cool about AppLovin. They absolutely deserve to get added into the S&P 500. Check out the growth here. The sales are up 77% year over year. And look at the revenue, it's 1.26 billion. Out of this 1.26 billion in revenue, 820 million of it was net income. And that was real as well, not some one-time adjustment. So that means they have a 65% net margin. And that margin grew from 43%. 43% net margins are already fantastic. And they increased it to 65. That's a higher margin than NVIDIA now. I can't believe it. Also, the free cash flow numbers are ridiculous. 770 mil of free cash flow. So, hold up. Shout out to Tengrika for the ice cream bowl, the Sunday bowl. Thank you so much, Tengrika, for the donation there. I do really appreciate it. You got a stock you want to look at, let me know. Happy Sunday, by the way. Yeah, thanks for the Sunday bowl on Sunday. So AppLovin has ridiculous margins, 87% gross margins, 65%. You go spend $100 with this company, $65 of it is added or is net after-tax net income for them. Pretty crazy. All right, so what? Someone said USA. That can't be a ticker symbol, is it? Liberty All-Star Equity Fund. Unfortunately, this looks like a high income ETF if I had to guess. Let me go verify. So you get a 10% dividend yield. Notice the dividend does kind of trickle down every year. What do they own? Oh, so it's a covered call ETF. So, it owns Microsoft, NVIDIA, Amazon, and then they sell calls on it. So these don't really outperform in the long run. That's why this ETF is the same price that it was back in 2018. So you basically buy that to maximize your dividend income. Don't really expect to outperform. But yeah. Nice little dividend play. Ticker symbol FIG. That's that IPO. They just IPO'd. I know someone who developed an app using the Figma software. So they're actually really growthy. Here's what actually I do like about them. The sales are growing very nicely. The sales are up 40% year over year. Again, they just IPO'd, so there's not too much data we get, but the revenue that we do get is up 40% year over year, and they made net income on that. They made net income this quarter and last quarter, so they're going to be consistently making net income. They have 80-90% gross margins, really good balance sheet as well. So Figma is actually pretty interesting. I got to do more research on them, but they have a pretty cool software. Do you want to develop an app from Rick and Morty? Or what? Okay. Can you explain the stock dilution of TSSI? Yeah, let's do it. So TSSI, here's how also this company, let's see how much they diluted you by. Let me see. So they diluted you by $9 million in the most recent quarter. Also, here's another way you can check dilution. We can see the net income is up by 5.7. But the net income per share is actually, look at this, flat year over year. So that means they diluted you by 5.7% year over year. So you own 5.7% less of the company than you did a year ago. So that is one thing you got to be aware of. And this is a very small company. Check out the market cap, a $370 million market cap. So that's a very small company. That's why $9 million is significant if they issue that. But here's why I do like this one. And again, as much as I like them, I would not make this as a huge, meaningful size position, have it as a very small position. But they're actually net income positive. So a $300 billion company that's actually making net income every quarter. And the sales growth is very strong. The sales are up 261% year over year from 12 to 43. So there's some risks. And yeah, it's like a mixed bag on that company right there. So can you look at the ETF BALI? So iShares Advantage Large Cap Income ETF. What's the yield here? So an 8.4% dividend yield. And it looks like they sell calls on the S&P 500 or the NASDAQ. So yeah, and it's run by BlackRock because it's iShares. So the expense ratio fees are probably low. Let me see. Yeah, 0.35% expense ratio. That's the same as JEPI. It's low for the, or it's not low, but it's low for the income ETFs. Those don't really outperform in the long run, though. But it looks like you buy it to maximize your income. Hey, what up, Yusuf? So he said Webull, another brokerage. They do the exact same thing as Robinhood, ticker symbol Hood, and Hood just got added into the S&P 500. Here's the funny thing. this app that I'm on right here, this is Webull. So the stock we're looking at, ticker symbol BULL, is this app right here, this brokerage publicly traded. And I've probably given them a lot of transaction fees and stuff. So you're welcome. But here's the thing I really like about them is how growthy they are. The sales are up 46% year over year, very solid. And they just now added crypto to the platform. I wonder if it'll show that at the top. No, but basically they just now added in crypto, and that's where you can make a lot of high margin fees. Like Robinhood, half of their basically profits come from crypto transaction fees, but they are still losing money. Like they lost 30 mil this quarter, but the previous 2 quarters they did make net income. So I do like Webull. They have a bit of a complicated share structure, but they are they're not an ADR. They're a US listed stock. CRMB. All right, let me know if you're talking about CRMD, Christina. I do own CRMD stock. How's it going? Let me know if you're CRMB. Does that even exist? Yeah, CRMB does not exist. You must be talking about CRMD. I actually do own that company in my Roth IRA. So let me go over this stock really quickly. Yeah, full disclosure. Oh, wait, how's the market doing really quickly? We'll check it out. Yeah, the Qs are doing great. QQQs are up 0.4% right now. Nvidia's positive, Apple's green, Tesla's up 1, Robinhood's up 8.5. Let's go. But let me go over a stock here in my Roth IRA. It's actually my most recent purchase. This is ticker symbol CRMD, Core Medics. And as much as I love this company, when I'm about to go over this stock, as much as I love them, I'm only putting in a couple $100s in the stock. I wouldn't make them as a meaningful size position in a portfolio as much as I love them, and I do love them. I think they're legit a 3x stock. I actually just made a YouTube video about it. If you want to learn more about the stock, check out my most recent YouTube video. My YouTube channel is called Nathan Robert. You can just type in YouTube Nathan Robert, also a link to my bio. But look at this. This is a $925 million company. Remember that market cap. They're worth $925 million, and they legit have no debt at all, no debt on the books, and $190 million of cash. That gives them tremendous freedom. It's a huge safety net. Legit 19% or more than that, 20% of the entire market cap, the entire worth, the valuation you're paying is just their cash on hand. And so now we got to value the rest of the business, and when we do, they're growing like crazy. The revenue is $39 million this quarter, a record, and out of this $39 million revenue, 19 million of it was net income. They have Reddit type margins. They have a 95% gross margin, 50% net margin. It is ridiculous the profits they're making. There is some risk though, and the revenue is expected to continue to climb. This already was a record quarter, 39.7 mil, but now it's expected to go over this to 62 mil next quarter and then 100 mil the next quarter. And the net income is expected to keep on climbing as well, and the EBITDA. So that's why I think it's odd this one's worth only 900 mil. Also, one risk, they sell this one product, only one product right now. It's called Deaf and Cath, and 60% of the sales come from one customer, one hospital group. But yeah, I do really like CRMD. And that being said, they just acquired a company for I forget how much, but it's double-digit accretive to their EPS, and it's adding 7 new products to their portfolio. So they're going from a 1-product portfolio to 7 or 8 products. So that's interesting. Hey, what up, Jonathan? What stock gave you the most heartache? It was 3M for me. The stock that I have the biggest losses on, and here I'll be fully transparent, is ticker symbol CHPT, Charge Point. So this stock is at an all-time low. I'm so glad I sold out of this stock, by the way, because they just continue to climb lower. But look, here's their all-time low. Here's where I sold it at. I sold all my shares right here. Yeah, it shows the sell order. I sold all my shares. I think I had 66 of them. Yeah, I had 66 shares. I sold them all at this candlestick right here. And guess where I bought all the shares? I was buying my shares way up here, dude. So I sold them for like a huge lost like close to $2,000 on them. So that's why we're only up 16% all time in here. We've definitely underperformed the market. Yeah, so we do have some losers in here like UiPath, Zoom, CPRX. All right, so Mike said NVIDIA. Let's do NVIDIA. I haven't looked at them tonight. So this company I love, but it's hard to buy this one to make like a meaningful amount of money on because they're worth $4 trillion. So the whole company's worth $4 trillion. If you buy them right now, for you to double your money, they have to go to an $8 trillion market cap. So just the law of large numbers is starting to affect them. But they deserve this huge market cap. They have a huge 20% PC GPU market share. Automotive revenues growing. Lucid uses their automotive software for their autonomous cars. They're mainly a data center company, though. That's like 85% of all their sales, the data center business. Data centers need GPUs, and NVIDIA makes their own GPUs, and they can supply them themselves at the cheapest and quickest. And check this out. This is the also crazy part. The sales are up 55% to 50 billion. And out of this 46 billion of revenue, 26 billion of it was net income. They have 50% plus net margins. The net income's up 59%. I mean, this is crazy. 26 billion of after-tax net income. That's like the market cap of so many companies that I own. That's the entire market cap of my largest holding, Comfort Systems. They're worth 25 billion. So they made just in net income this quarter, this entire company. All right, let's go here. So do you think Broadcom will out earn NVIDIA in the long run? I don't know. That they have to double in size first. CJMB, but I love Broadcom. I think they're both going to be winners in the long run, Broadcom and NVIDIA. So let's do it, NASCAR. He said CJMB. Now, I don't know if this is the stock you're talking about. Honestly, we don't really cover these kind of stocks in the channel. This is a $21 million company. That is a ridiculously small market cap. $20 million. Do they have sales? $1 million of sales, and it's down 17%. They lost $1 million on this. So yeah. What apps are you using? All the apps I'm using are in the link tree in my bio, or they're actually brokerages. So this is my favorite one right here. This app that I'm on right here is my favorite one. It's in the link tree in my bio. It's actually the very first link there. They're affiliate links, by the way, full disclosure. So I have all these apps linked though. But this is my favorite one right here. Most useful, lowest fee, free brokerage. Like with Robinhood, you got to pay $5 a month to get the 4% APY, but that's why I keep my cash in here on Moomoo, because you don't have to pay $5 a month and you get the 4.10% APY. Pretty cool. So let's see. What up, Men Toki? He said, look at Adobe. Let's check out Adobe stock. So I think this one is undervalued. And hey, yeah, EW Tube said SoFi is the best. I agree. I love SoFi. They're one of my best performance stocks of all time. I'm up by 300% on them, which is just crazy. But here's Adobe. This stock, I believe, is undervalued. They're really getting hurt from the thesis right now, like ChatGPT AI will replace Adobe in 10 years. I know someone who made a fantastic logo in ChatGPT that would take me a long time to replicate. But I think Adobe, it's they're overpricing this in. I think we're always going to need that final touch on art. And this multiple is dog cheap. They're trading at 22 times net income. The industry average is 37. So super cheap valuation. And they're still growing like crazy. The sales are up 10% year over year, double digits. And they're making easily 1.7 billion plus of net income every single quarter. So, and the free cash flow is even better. They're making over 2 billion of free cash flow a quarter. I'm on Adobe, I'm on Photoshop, After Effects near daily. And what is Adobe doing with 1.7, 1.8 billion of net income a quarter? Well, they're solely spending it on share buybacks. So that's how the net income was only up 7.5, but the net income per share is up by 12.9 because they're plowing all their net income into share buybacks. Share part of the ratio went down a bunch. Favorite oil dividend stock? Probably be ExxonMobil or EOG. Honestly, probably EOG Resources. I love this as an oil and gas play. Get a 3.2% yield, 33% payout ratio. Basically just a great oil and gas stock. I also like ExxonMobil, XOM, Chevron's decent too. I think Adobe is going to be like Google. Yeah, where like Google was so suppressed from the AI thesis hurting them, but then Google overcame it. They have great numbers. They're actually going to be an AI beneficiary. The market could price in like, oh, Adobe's actually going to be an AI beneficiary. All right, but Google was an easier buy. Yeah, exactly. Google was a lot more safer. Because there's also like Canva. There's increasing competition for Photoshop and these other products. But check out Google right here. Yeah, I love Google. This is an absolute behemoth of a company. Wonder if there's any news here. Oh yeah, Meta signed a $10 billion cloud deal agreement with Google. Waymo expands vehicle service to San Jose Airport. That's really interesting. Also, Waymo, it's their autonomous driving thing. No driver in the car, taxi. They're in New York now. But anyway, Google's at all-time highs. They are just printing money. 96 billion in revenue, up 13% year over year. The revenue's up 13, but the net income is up by 19. That means they're expanding their net margin, 30% net margin on a near $3 trillion company. Ridiculous. And again, what is Google doing with legit 30 billion of after-tax net income a quarter? This is the crazy part. This is why they don't go down. They're spending it all on share buybacks. Look at this, 14 billion this quarter on share buybacks, 15 billion of their after-tax net income a quarter just buying back their own shares. Again, net income's up 19, but net income per share is up by 22.2. That's the power of the buybacks, and you get the dividend. So that's why I'm not selling a single share of my Google. Even though they're at all-time highs, let me pull up my position. I'm not selling, and I haven't sold ever a single share of Google. So yeah, we're up 44% on them. And even though they're at all-time highs, they're trading at 25 times net income. That's pretty fair for a Mag 7 stock. Market's pretty happy in the overnight market, by the way. QQQ is up 0.33. So expect a green day tomorrow, hopefully. All right. Any advice on how to on buying? Wait, start a REIT. First off, these REITs don't really outperform the market in the long run. But here's a cool REIT, LAMR. This is a billboard advertising REIT, and REITs, which stands for Real Estate Investment Trust, and 90% of their assets have to be real estate. They are taxed differently. So whenever you receive this dividend income, they're taxed as short-term capital gains. But this company, by law, has to pay out 90% of the taxable income in the form of a dividend to avoid paying taxes. So you buy them for the dividend. And their interest rate, a lot of the sectors are interest rate sensitive as well. So as interest rates go lower, the REITs like Realty Income should really benefit. What apps do you use to analyze this? Yeah, hey, Pedro, this is my favorite app right here. It's actually a brokerage where you buy stocks. It's in the link tree in my bio, the very first link there. It's my favorite one. It's an affiliate link, full disclosure. But someone said, Oscar, let's do OSCR. This is another Medicare, Medicaid stock, kind of like United Healthcare. And that's why they really gap down, with the same United Healthcare fears. But check out what's so cool about Oscar Health. This is what I love, is how growthy the business has been. They're really taking market share. Like, check this out. In 2019, the full year, the revenue was 550 mil, then 590 mil. But now it's 9.2 billion, nearly 10 billion of annual revenue. Sales are near 3 billion this quarter, up 29% after growing 45, after growing 44. So the growth is ridiculous. They're still not making any money. They're still net income negative. And there is still the headwinds from the government regulation cracking down on the Medicare, Medicaid profits and how they bill the federal government. But Oscar Health is pretty interesting. All right, let's see. HL stock. Oh yeah, I meant to get to this one earlier. That's my bad. Let me actually all right. So here's Hecla Mining. Have not heard of this stock before, but they have had an incredible rally. They're at an all-time high pretty much. Maybe they're related to gold. Let's go find out. So yeah, they own a bunch of mines. Greens Creek, Kasab, Barati, whatever, Lucky Friday. How's that one doing? Nice. So yeah, I believe this is a gold mining company. Yep, precious metals. Let me see the net income. So revenue of 300 mil, up 23%. And out of that, they made 57 mil of net income. That's really good. I can see why this one's at all-time highs. So the profits are like the highest they've been in a very long time. They have a good balance sheet as well. So nice. Looks like a pseudo gold play. Probably too late. Yeah, I'd be careful with that one. It's kind of like buying gold at all-time highs. Like ticker symbol IAU is gold. Like it's tough buying gold right here. Gold legit right now, if you didn't know, is at an all-time high. So if you got any gold chains, gold jewelry, you don't need it anymore, maybe go hit up the pawn shop and trade it for cash and buy some stocks. But anyway, um, ooh, what's this one? T or he said SPCB. What is this stock? Supercom. Okay, so we don't really cover these kind of stocks. Again, the whole company is worth $43 million. So that's an extremely small market cap. So they have sales at least. Sales of 7 million, only up 2% year over year. They made they did make net income actually this quarter. They made net income on that. So that's actually not too shabby. Um, the balance sheet just beefed up and did they dilute you? Or, I don't know what just happened, but it's not the end of the world. I don't love the slow growth. Like sales are only up 2%. They did make net income on it too, but nothing's blowing me away there. They're just too small. They're too small of a market cap. I actually got the Nvidia. Oh, nice, Looney. I appreciate that. So Looney, someone said KHC, Kraft Heinz. You know who owns Kraft Heinz? It's actually Warren Buffett. It's 3% of his portfolio, and they've kind of been a disappointing hold. I would honestly avoid this one. So what's the yield on this one? So they have a 6% dividend yield. Pretty crazy. Very nice dividend yield. And hey, what up, free me? Hope you're having a great day. I know one thing, Kraft Heinz is trying to do the split off. Like they're trying to sell off like Kraft Heinz low margin brands from the high margin brands. Kind of complicating it, but here's the money they're making. So this is really what you want to look at. They're making, it's down 6% year over year, but they made you got to add tax and they paid tax on this. So it's actually a little lower. So, because if we go to the net income, they had a little one-time adjustment. It says they lost 7.8 billion. Not sure how that happened, but they made probably $1 billion of net income. Let's see how much the dividend cost. The dividend cost $474 million, so they can still afford the 5% dividend. But yeah, I'd be really careful with that one. That's Lunchables stock, Ketchup, Capri Sun. They own those stocks. And no way, Jonathan Rosario, Jonathan, thanks so much, my man, for the rose, or for the really cool gift. I really appreciate that, Jonathan. If you got a stock you want me to look at, let me know. I got you. And yo, free me. Good to see you, man. Hope you're having a great Sunday too. What apps do you use? Yeah, hey, Mike, if you want to, I'm on a brokerage right here where you buy stocks. If you want to get it, it's in the link tree in my bio, the first link there. So yeah. Min said DEFT, please. Let's do DEFT. What's this one? So DeFi Technologies. So a pretty small one. They're worth $688 million. And they've kind of been struggling the past couple weeks. So what do they own? Valor Inc., whatever that is. Let's see. Total sales this looks really choppy for some reason. Like, how did the revenue go negative? I don't know. But the revenue this quarter was $13 million. They lost money, but not much. This just looks weird to analyze. I wish I could give you some more thoughts on this, but I would probably just stay away. They're very small, only worth 600 mil. I don't know. Be careful with that one. Hey, this is a cool stock I like though. So here's HIMS. Now, there's some good news and bad news about the stock. I know they were trying to bring back this company used to sell a weight loss prescription on their website, and it led to a lot of the growth. If we go to the sales right here, the sales have been super growthy, up 72% after going 50, after going 80. So super growthy sales, but a lot of the growth has come from them selling a weight loss prescription. They actually used to sell Ozempic. Ozempic, if you've heard of that before, Elon Musk is on it. But now NVO ended their partnership with them, and now they no longer sell any weight loss prescriptions on their website. So that is going to hurt their future growth. But for right now, the business is doing great. The revenue's up 72%. They're making net income every quarter. Very, very nice. Close to like 200 mil a year. The assets did go up with the liabilities. They did issue some debt, but that's how their cash went from 300 mil to 1.2 billion. So I do like them though. I do like that stock. Best stock you're buying right now or hold for a while? I'm not seeing too much. One stock I've been dollar cost averaging into is Coca-Cola Consolidated, ticker symbol COKE. Um, some other stocks that look decent at these valuations is Sprouts Farmers Market, Progressive Corp, and TAP. All three of those stocks, I believe, are at a pretty good valuation right now. Hey, Robinhood just joined the S&P 500. They're up 8% right now. Great news. So yeah. Hey, what up, Ed Music? Good to see you. What stock was your biggest that paid off? Ooh, maybe. I don't know, man. I try not to buy any stocks that I think are like so risky. So I don't know. I really don't know. Maybe Rumble, but like if I do find a stock that I feel like is super super risky, I don't put a lot of money into it. Like Rumble, for example, up 56%. I would have never expected that because Rumble is a terrible fundamentals company. What are some good stocks to start off with? First off, I'd buy the S&P 500 as like a good backbone, but then I'd just buy individual companies that love, and use, like Meta, Google, McDonald's, United Rentals, Nvidia, AMD, Amazon, Coca-Cola. Those are all a lot of those I own. Rocket Mortgage. PSIX. I do love that stock. I'm surprised anyone's heard of that one. Actually, let me go to AMD right here. Let me go to this stock right here. Let me know if you still want me to look at Rocket Mortgage. We did look at them earlier, but we could check them out again. So here's AMD. I do own AMD, by the way. Let me pull them up. I own 11 shares of AMD, and we didn't even time the bottom on this one. The bottom was 70 or $80, and we bought them at 125. And we're still up pretty good on our shares. Here's what's so cool about AMD. They have a really big market share, 17% PC GPU market share. That's led to a lot of growth in their client and gaming business, which is up 69% year over year. Another huge growth factor has been the data center business. Data centers need GPUs, and AMD makes their own GPUs and can supply them themselves cheapest and the quickest. And that business is up 15% year over year after, growing 120%. The free cash flow is amazing. That's what FCF stands for, free cash flow. It was 1.8 billion this quarter. That was a record quarter of free cash flow, record net income quarter of 900 million. The growth is finally back. Sales are up 33%. They have an absolute monster balance sheet, no net debt. This looks great. So for those reasons is why I own AMD. Nvidia is worth $4 trillion. For you to double your money on them, they have to go to 8 trillion. And I think it's easier with AMD because they're worth 250 billion. Hey, yeah, no problem. One stock, Finn. Yeah, watch out for. Hey, by the way, I sell nothing. I have no course, book, Discord, WhatsApp, Telegram. I ain't got none of that. I'll never follow you, DM you. This is my only account. The only thing I do have, though, if you do want to support me, best way to support me is just subscribe to my YouTube channel. I'm trying to build up my followers on there, build up the stream on there because I'm streaming on YouTube as well. My YouTube channel, again, is called Nathan Robert. It's also in the link tree in my bio, but you can just type in YouTube Nathan Robert. So I'd appreciate if you head over to that stream, trying to build up the followers over there. But anyway, here's PSIX. This is a stock I own, and as much as I like them, I only have 5 shares of this stock. Here's what's so great about this company. I bought them at an all-time high, and then they just continue to hit new all-time highs. So they're only worth $2 billion. And out of all, here's what's so crazy. The revenue is at a record, up 73% year over year. And also, the net income's at a record. They're net income positive. They made $51 million in net income this quarter. They're deleveraging the balance sheet, which is great news. So everything there financially is headed in the right direction on Power Solutions. Pretty cool company, I think. I made a YouTube video about them too if you want to check it out. Data center's kind of weak. Hey, it was up 15% year over year. Do you trade options? I do not really. So NASCAR said, I would not be shocked if TIRX, let me see, TIRX stock. Let's see, wait, TIRX. So yeah, so again, this one you got to be really careful with. So they're only worth $60 million. That's the entire market cap. They're worth $60 million and the stock is at all-time lows. So do they have sales? So the first half of this year, they had 2 million of sales. Where does their revenue come from? All the revenue comes from China. So it's a Chinese company with 3 million of sales so far this year. Losing net income. They have a good balance sheet though. That is good news. How much cash they got? They have 30 million of cash and pretty much no debt, so they can afford to lose some money. Um, they are at all-time lows though. They're Chinese. I'd be super careful with that one. They just have no revenue, just super small. Hey, what up, Dylan? He said DPST ETF. So regional banks Bull 3X ETF. So I'd be super careful with the 3X ETFs. You get smoked whenever these go down. Um, if the underlying asset falls 30%, this falls 90%, and then let's say from there after it falls 30% and then 3X's, you're still underwater like crazy. Anyway, you just swing trade that right there because there's so much volatility. What do you think of the IPOs that are coming? Yeah, the IPOs, what we've seen a lot recently is a lot of the IPOs, they purposely underprice the market cap that they IPO at. One I'm watching is Klarna. This is a buy now, pay later stock. If we look at Affirm, which is another buy now, pay later company, they're doing great, but do beware if you buy them before the IPO. There is the flipping policy. If you buy them before the IPO, you can't sell your shares for 30 days, or you can, but if you do, you'll be restricted from future IPOs. So that's the unfortunate part because the huge appeal is that as soon as they IPO, they legit rally 50% and then slowly bleed out. It's like we see that happen so many times with Figma, with Webull, with Bullish, with CoreWeave, with all the IPOs recently. All right. What up, Graham? What up, Graham Conquer? How's it going, man? Happy Sunday, by the way. Good to see you. So let's see. Check out MSOS. What is MSOS? Let's see. Pure USO Leaf ETF. I can't cover this industry. But yeah, they got Green Thumb. I think a lot of Green Thumb, or no, it's a different company, is owned by Altria. They own Curaleaf. How's Curaleaf doing? CURA stock. They're worth $3 billion, but they lose a bunch of money. Anyway, I wouldn't buy that one. Let's see. ASTS. Yeah, ASTS Space Mobile. I'd be real careful with this one. Here's why. I remember Reddit IPO like it was yesterday. I remember the Reddit IPO too. I thought it was a meme stock. Then I did my research and then bought Reddit. So here's ASTS Space Mobile. It's not my favorite space stock. My favorite space stock would actually be Rocket Lab, RKLB. Here's the thing about ASTS Space Mobile. Right now, they don't really have any revenue. $1 million of revenue this quarter. That's not much. But here's the good news. If we look at the expectations, check this out. The next 2 quarters on ASTS Space Mobile are super crucial because they're finally transitioning from a revenue-less company to revenue. It's going to go from, their analysts are expecting 25 mil, then 32 mil. So really watch the next 2 quarters on this company. They also burn through money a lot. Like they lost 100 mil this quarter, 60 mil. They dilute you. Yeah, dang, they're issuing a couple $100 million of stock every quarter. That's really bad news. They diluted you by 400 million, 400 million. Yikes. How do I get into this? Yeah, hey, you want to get into stocks, you just get a brokerage. This is my favorite brokerage right here. If you want to get it, it's in the link tree in my bio, the very first link there. It's an affiliate link too, so if you go and sign up, we'll actually both get a little fractional share of NVIDIA. Yeah, this is my favorite. It's the lowest fee brokerage, most useful one. I also use Robinhood. It's a very simple one. I use Webull as well, but they're just not as useful. And like Robinhood, you have to pay $5 a month to get the 4% APY. You don't have to with this one. It's free. There is no monthly payments. It's my favorite one. So anyway, link tree in bio, first link there. It is an affiliate link, full disclosure too, so we'll both get a little benefit. All right. I remember, let's go look at Reddit, man. Yeah, so Reddit, I always thought this stock was a meme company, but this stock is no meme. They have incredible financials. I can't believe it. I mean, they first off have no debt whatsoever, completely debt-free company, gives them a lot of freedom, $2 billion of cash, no debt. That's a great position to be in. And, they also are super growthy. The sales are up by 77% year over year after growing 53%. They're growing their ARPU, their average revenue per user, by 48% year over year. So they're making 48% more money per user than they were the previous year. They're making nearly $4 a year off every person. And they're finally profitable as well. 90 mil of net income. This is the most profitable quarter they've ever had. The free cash flow is ridiculous, up 300% year over year. Margins are ridiculous. 90% gross margins. Pretty much doesn't take anything to run Reddit. Okay. Remember last year, watch machines house, now phones are banned. Dang. They banned Yahoo Finance on the Wi-Fi. Why would they do that? That's so weird. People trying to learn. Will Best Buy continue its run? Let's look at Best Buy, BBY. So, hey, this is some technical analysis. This app is telling me that there is a megaphone bottom, and this pattern has a rise probability of 90% chance. That's technical analysis. I like looking at the fundies, the financial analysis. So a lot of people like Best Buy for the yield. Check this out. You get a 5% dividend. So 5% of your money back just in cash payments. I remember this company was seeing a boom from they were doing advertising like, hey, buy products, buy your laptop, buy your iPhone now before the tariffs hit. And they saw a significant boom of sales off that. But again, not enough for me to be intrigued to buy the company. The sales are only up by 1.6% year over year. That's not good, to be honest. That doesn't even beat inflation. So sales are up by 1.6. The net income is actually down by 36% year over year. So they're losing their margins a bit. Is that real? Yeah, gross margins fell and net margins fell. They only have a 1 to 2% net margin. So very low margin business. Yeah, I'd be really careful with Best Buy, to be honest with you. I don't really expect them to outperform the market in the long run. Musk to get 423 million of shares. Could be worth 1 trillion if approved. Yeah, I heard about that, John. Yeah, so Tesla, or if Elon Musk can bring Tesla to an $8 trillion market cap, his net worth will be $1 trillion, or by a certain year. I forget the exact requirements, but if he can basically 7x the company from where it is today, his net worth will be $1 trillion. I can't believe that. That'll be a long time, but what app is this? Yeah, hey, FML, this is a brokerage right here where you get stocks, you buy stocks on it. It's in the link tree in my bio, the very first link there. It's my favorite one. All right, so let's see. Only Klarna, Gemini looks good. Yeah, Gemini, they're like a crypto brokerage, like a crypto proxy. I wonder how they will do too. We got a lot of interesting IPOs. So let's look at Dutch Bros right here. Oh, and Rocket Lab. I forgot to get to Rocket Lab. We're looking at Rocket Lab after this. So here's Dutch Bros. This is like a Starbucks competitor. And check this out. They have their company-operated shops. The ones that they own are up 28% year over year after growing 33, after going 37. So, for a restaurant in this environment, that's really good. That's great. Wendy's is struggling. Denny's is struggling. So many restaurants are struggling. But Dutch Bros, Starbucks is struggling. But Dutch Bros, revenue is doing great. They also have their franchise fees. Their franchise revenue is up 19% year over year. So both segments are growing, which is nice. Revenue's up 27. Net income is up 73. So they're growing their margins, which is great. Free cash flow looks good. These year over year growth rates are phenomenal. So I honestly think Dutch Bros is better than Starbucks, but I don't know how great they'll perform in the long run. So let's look at Rocket Lab right here. This is my favorite space stock out there, especially after the Geost acquisition. The future growth should be even better on Rocket Lab. The valuation is a bit high here, so I wouldn't go all in at this price right here. But I'd wait probably for a 10 to 15% drop to really buy significantly. But check this out. The space systems revenue is up 27%. Super growthy. These year-over-year growth rates in the middle. Super growthy space systems revenue. It hit a record sales this quarter. And not only the space systems revenue hit a sales, but also their launch services, because they launch satellites, they launch rockets into space. That one's also at a record 46 million. It's never been over 46 million before, up 60% year over year. So both businesses are booming. Do beware though, they are losing net income every quarter. That's not great, but it's okay for now because of how growthy they are, and the Geost acquisition will add even more growth to the sales. So yeah. Food2 is at the Moomoo parent company. It is, Burner. Yes, sir. And full disclosure, I do own that stock. I got Robinhood too. I got Robinhood stock. I got Futu stock. I got a SoFi. I got all the fintechs. I love them. Let's see. Robinhood just got added into the S&P 500. They're up 8%. Pretty crazy. Hey, what up, Francis? And John said, what about DTE Energy? Let's do it. So DTE Energy. So this looks like a utility company, $28 billion market cap. Let's go analyze them. So they're trading at 19 times net income. That's pretty fair for a utility. Yeah, the industry average is 18. So electric, energy trading, gas. What about the profits here? So they're making a consistent stream of near 3 to 500 million of net income every quarter. So that's really good. You get a 3% dividend. Yeah, these utilities usually have really good yields. So you get a 3% dividend. Not too bad. Just look like an average utility company. Super Micro. Hey, what up, mom? So this is Super Micro right here. I wouldn't buy this stock until it goes to $35. I do own this one, by the way. Let me pull that up for you. Where are they? Super Micro. Yeah, so we do own 10 shares of Super Micro Computer. I bought them a while back during the accounting fraud issues, but here's why I wouldn't touch this one. I have a scary feeling they're going probably to like $37 to $35 because they lost their margins. So check this out. The actual revenue here grew year over year. The revenue is up 7.5%, but here's the bad news. Revenue's up, but net income is down by 34%. They're giving customers bulk deals and they're losing their margins. They only had a 3.3% margin and that margin fell by 38%. So that's one thing that does worry me. So that's why I wouldn't buy this one at $40. I'd wait for it to go lower to buy meaningfully. Mike said, what app is this? Yeah, hey, again, if you want to get this app I'm on, this is a brokerage. It's in the link tree in my bio, the very first link there. Toast stock. What up, D? He said Toast, T-O-S-T. This is a point of sales system software company that helps out restaurants. And I also own that stock. So look at that. I got 15 shares of Toast, full disclosure. It's worth $600 for me. But here's what I love about them. If we go to their revenue right here, their revenue just hits a new record every year, every quarter. So the sales are up 25% after growing 26, after growing 37, after growing 50, after growing 100. So revenue just continues this growth streak. And now they're finally net income positive as well. They made net income for the past 3 quarters. Analysts are expecting them to continue to make positive net income. So I do really like Toast. They are a bit reliant on restaurants, though. And some restaurants are struggling. So what is this one right here? Wait. EFC, let's do EFC right here. So sorry if I don't get to all the stocks here. I do try and get to all of them. But here's EFC. This is Ellington Financial. So this stock, unfortunately, has not done too well. Like, they're below the price that they were in 2019. So do they have a high dividend? So yeah, this must be a mortgage REIT or something. So they have an 11.3 or a BDC. I mean, this is probably a BDC because they have an 11.3% dividend yield. Investment portfolio. Yeah, they're kind of like a Main Street Capital. You look at the net asset value. But unfortunately, what we're seeing with a lot of these BDCs is they pay out more money than they make. Like, let's see, they made 51 mil this quarter. 40 mil, 30 mil. Let's go see how much the dividend cost every quarter. So you go to the cash flow statement and the dividend cost every single quarter, $44 million. So they at very least need to make $44 million of net income to afford the dividend. And good news, they could afford the dividend this quarter, but they couldn't last quarter or the previous quarter. So that's probably why that one stock looks a bit odd, but yeah. Realty Income. Yeah, hey, Robbie, try not to spam there. That's another REIT. That's actually one of the few companies that pay monthly. So if you actually, let me pull it up over here. If you buy this stock, you actually get paid a monthly dividend. You basically buy this to maximize your dividend income. They pay you 27 cents every month. But do beware, these don't outperform the S&P 500 in the long run. Like, this stock is below where they were in 2019. And but they do have a sustainable 5.5% dividend. They do triple net leases for like gas stations, like 7-Eleven's a big tenant for them, Dollar Tree, Dollar General, certain grocery stores too. Can you trade weekly options with Moomoo? Yeah, you can, Joey. Yes, sir. Let's see. If you go to options right here, they have so many different strategies you can do on here. But anyway. All right. What stock oh yeah, Futu stock. You said, can we look at FUTU stock? So yeah, if you're wondering what is Futu stock, and I do own this company, by the way, I believe this is the next Robinhood. I have 8 shares of them. And if you're wondering what this company does, they do the exact same thing as Robinhood. This stock right here, FUTU stock, is literally the app that I'm on right now. So this little software, this brokerage I'm using, this is their stock publicly traded. And it's good to know that they're doing great, So even if this company went bankrupt, it's FDIC insured for $250,000, so you wouldn't lose any money if the company went BK because they're brokers. But check this out: they're printing money. This is good to know. They made $330 million of net income this quarter, up 111%. Like, check this out: sales are up 69, but net income's up 111. They have ridiculous 48% net margins. So ridiculous. They make brokerage commissions. That's up 86% year over year. They also make a bunch of interest income. That's up 43% year over year. I keep my cash in there, and they also earn a little cash on top of that. And then they have this other income. This is their crypto transaction fees. That's up 175% year over year to a record. Incredible. So all 3 businesses are booming. They also pay dividends, or a special dividend every year, which is cool. Low PE, a 25 PE. That's what I like about them. They're a brokerage like Robinhood, but a way lower multiple. Their users are growing. Futu is Moomoo. Yeah. So again, this stock that I'm looking at is this app that I'm on right now, publicly traded. Oh, by the way, if you do want to get this app that I'm on right here, it's in the link tree in my bio, the very first link there. It's a brokerage, my favorite one. And yeah, remember we looked at their interest income. That's this money. Like, I keep my cash in here to earn interest. I have $1,000 of cash earning interest. I get a 4.10% APY. They also earn a little bit of APY on top of that. So anyway, that's pretty cool. All right, let's keep going. Someone said, "Ooh, do you mainly buy or hold long term?" Yeah, I mainly just buy and hold for the long run. Yep. Buy and hold forever. Can you look at USOY? I'm getting over $100 per week on $1,000. Why? So yeah, here's the thing, Captain Brian. So yeah, you're getting that really good dividend income, but look at what the stock price has done. I mean, this was available, or this IPO'd in 2024. It was $20. Now it's $8, and it literally hit if we zoom in, hit an all-time low. If you've ever bought this, you're down on your position. It's at an all-time low. So yeah, what's the yield? You get 100% dividend. The dividend will go down in the future. The future payouts go down just from the net asset erosion of these covered call ETFs and the crazy fees. 1% plus fees. So I would avoid this one. You got to look at the total return. Yeah, you get the crazy yield, but they don't really outperform in the long run. They sell covered calls on, or they basically sell calls on oil. Or like, I use Toast every day, so it inclines me to buy. Hey, free me, yeah. And that's the thing. Like, you'll like using it more. Like whenever I go to McDonald's, I feel better about it because I'm a shareholder of McDonald's. I like going on YouTube, so I buy Google stock. I like Instagram and Threads, so I buy Meta stock. Why not? Invest in what you know. All right, so hey, what up, Jonathan? He said OKLO. Hey, thanks again for that gift there that you gave me. I do really appreciate that. So here is OKLO. This is a nuclear momentum company that, like, Sam Altman founded. He quit the company, but basically this company moves with all of the nuclear stocks. But here's why. Out of all the nuclear stocks out there, and I've looked at all of them, the one I chose to buy was CEG Constellation Energy. This is the real purest nuclear play. They own 55% of all the U.S. nuclear reactors. It's tough buying them here, though. They have a huge data center with Microsoft. But here's the thing. Oklo right here, if you didn't know, OKLO is a startup. worth 11 billion. I cannot believe they're worth 11 billion because if we go to the revenue right here, it says no data because they've actually never sold anything. They've never sold a product or a service, so they've never sold anything, and they're not losing that much money. So that's the thing with Oklo I would be careful about. Also, if you're wondering, how did their balance sheet just go from 300 mil to 700 million? They honestly did something smart. They diluted the shareholder by $440 million. They issued $400 million of stock to beef up their balance sheet. That's very smart of them because this market cap is ridiculous. So what I'm trying to say here is I'd avoid Oklo. I would buy a different nuclear stock like a Vistra Energy or a Constellation Energy over them. What are you using right now? Yeah, hey, EITAN. If you want to get this, I'm on a brokerage right here where you buy stocks. It's in the link tree in my bio, the very first link there if you want to get it. And yo, Solo HT, thanks so much for the roses, dude. I do really appreciate that. The little TikTok there. He said, ooh, so here's another high income fund. And hey, Richard, we'll look at APLD after this. CEG for the win. Yes, sir, dude. I love CEG. By the way, if you want to hit the follow button, we go live every Sunday this exact same time. And I sell nothing. I have no course book. I do have that affiliate link, but I don't sell anything. No course book, WhatsApp, Telegram, none of that. I'll never follow you or DM you. But here's MSTY. This is another covered call ETF. And here they're at an all-time low. Yeah, on Friday or the day before, they hit an all-time low. So yeah, this is another ETF you buy that pays you monthly dividends. So you get a monthly dividend and you get a crazy yield. You get a 166% dividend. But again, the future payouts are going down. The yield looks artificially high because whenever the stock price goes down, the yield goes up. So you buy that to maximize your dividend income. You don't really expect to outperform in the long run. But yeah. Okay, so APLD, this is a stock owned by NVIDIA. So if we go back to the NVIDIA portfolio right here, one of the stocks they own is APLD, and APLD is really benefiting from being in the NVIDIA ecosystem. They had a huge partnership with CoreWeave, and that's really why the stock gapped up on this news. They reaffirmed the good guidance on their earnings. So yeah, APLD is owned by NVIDIA. They're benefiting. Yeah, so I think if we zoom out, I think it used to break it down. So yeah, they're a data center hosting business and they're a cloud service provider. So yeah, that's APLD. And you just signed a big lease with CoreWeave, which is pretty cool. Tony said DocuSign. Yo, this is a really boring stock. I wouldn't buy this one. What stock have I been holding on for the longest? Maybe DocuSign, to be honest. I've owned this one since October 20. Actually, no. Probably legit, the stock I've owned for the longest might be Robinhood. I bought this stock near 4 years ago, right as they IPO'd, right? Let's see. Yeah, in 2021, I bought Robinhood, and that's when I started investing. But anyway, here's DocuSign. This company I would avoid. They did beat on earnings. They had actually some very nice beat on earnings. They beat on revenue. That's the orange line there. They beat on revenue. They beat on net income, and they beat on EBITDA. So it was a triple beat quarter. It was pretty good. But the slow growth isn't great, like single-digit growth, 8% year over year. They're making net income every quarter, which is good. But I would avoid DocuSign personally. And I do own them, but I wouldn't. I'm not buying any more shares of DocuSign, even close to where they're at today. What does open number mean? I'm not sure what that means, David. Open number. I don't know. All right. Hey, what up, Aaron? How's it going? So FDVV stock. What's this one? This is Fidelity Core Dividend ETF. So this ETF has done very well, and you get a 3% dividend. So you get a nice stock price appreciation and a dividend. And here it's top holdings. Yeah, this is why the appreciation of the ETF has done so well, because they own some tech names like NVIDIA, Microsoft, Apple. And then they have the higher yielding names like a JP Morgan, a Visa, a PM, an Exxon, a Mo. Yeah, a lot of the higher yielding names. They've actually done great. They might even be doing better than SEHD on a total return basis. So Dogu said GRAB. Is this on Moomoo? Yeah, hey, it is the Wealth Shift. Yes, sir. So here's Grab Holdings. This is a great company in my opinion, but it wouldn't make it as a huge size position. This is legit Uber for everywhere else except the United States. It's international Uber. So if you go to where they get their revenue from, check this out. Notice the US, Canada, the UK isn't on here. It's these, Malaysia, Indonesia, Singapore, Philippines. It's these other countries. And that's why it was genius for Uber to buy this stock. Uber is now the largest shareholder. Uber owns 13% of all the shares. Toyota Motor owns 5.5% of all the shares as well, which is pretty cool. But yeah, this is basically Uber for all those other countries. Pretty interesting. What's better than SCHG? I just walked in. Oh, yeah, that was FDVV. We were looking at this ETF right here. It's had very nice, very surprisingly good stock price appreciation, and that's even with a 3% dividend yield. So that probably total return better outperforms SCHD. Symbiotic. What up, D? So this is a very nice robotics company. If you're looking for a robotics stock, this is probably my second or third favorite pick. They own like 1,500 patents. They're a warehouse robotics company that they really help Walmart. Walmart is their largest customer, and Walmart loves them so much that they decided to buy the stock as well. And Walmart owns 14% of all the shares. The growth is very strong. Sales up 25%, near 5 to 600 million of revenue a quarter. They're still not making net income, but they're barely losing any money. So these are sustainable losses. These are I really like Symbiotic. All right. Bull stock. Yeah, what up, Chase? Yeah, bull stock again. This is Webull right here, another brokerage. Robinhood, we were just looking at them. They just got added into the S&P 500. That's why Robinhood's up 8% right now. Futu is another brokerage I really like. SoFi as well. Webull, though, this one I don't own. Here's what I like about them. They're really growthy. The sales are up 46% year over year. That's very solid growth. And they're struggling with net income positivity. They lost 30 mil this quarter, but they made net income the last 2 quarters. The thing about Webull is they just introduced crypto back to the app, and I think that's going to be a huge earnings tailwind in the future for them. So they're interesting, but I wouldn't make them as a huge position. AVPT. What up, Will? AVPT. So this is AvePoint. Yo, this one is on my watch list. They did fall on earnings. Let's go look at their earnings and see what happened. Let's go see if we can figure out why the stock fell so much. So they beat on revenue, they beat on net income, and they beat on EBITDA, but the stock still fell. So I wonder what happened. What we're seeing a lot recently is they'll beat on every metric, but they'll give bad guidance. It's really the guidance that's been hurting companies like ASML, for example. So in Marvel, the revenue is up 30% year over year. That's good. Their first ever $100 million revenue quarter. And out of the 100 mil, they made their net income positive. Yeah, they made, a couple mil on that. They have a really solid balance sheet. Like, look, the same time last year, the liabilities were 51% of the assets. Now, it's only 36%. So that's great news. The cash flow, they did dilute you a bit. Actually, they diluted you by 70 mil last quarter too. But not bad, actually. The growth is really good. And here's where the revenue comes from. Only 40% comes from the US. That's interesting. What's your next buy? I'm not sure. Thoughts on the FIRE movement? Yeah, that's good. Being saving up for retirement, that is good. So stocks to buy next week. So here's what I got. If you watch the very beginning of the stream, here's some companies that I think are at actually really good valuations right now. Like the market's at all-time highs. Like if you look at the screen right here, basically all the stocks right here, I would not buy at current valuations. A lot of the valuations are ridiculous, but there are some companies that I would pay right now valuations. These 3 right here. Ticker symbol SFM, Sprouts Farmers Market. It's like a healthy grocery store. I really like them. Progressive Corp, it's an insurance company. We're only up 0.19% on them. And finally, ticker symbol TAP, Molson. This is a nice dividend growth company, 3.7% yield, trading at 9 times net income. This is one that I think is very interesting. So yeah, actually, I could give you a quick analysis on this stock if you want. So they have a 3.7% dividend yield. The dividend is very safe. They made $400 million in net income just this quarter. So they made $400 million in net income just this quarter. And let's see how much the dividend cost. that 4% dividend actually cost 93 million of net income a quarter. So they could pay for the entire year of dividends just this quarter. So with the extra amount of money, they're actually buying back their own shares, which is pretty cool. So yeah. What was the second one? It was Sprouts Farmers Market, Progressive Corp, ticker symbol PGR, and TAP. So those are the stocks I'll look at. Actually, I'm so sorry, guys. If you want to hit the follow button, by the way, we go live every day, and we stream every Sunday at this exact same time. And the best way to support me is subscribe to my YouTube channel. I'm trying to build up my YouTube channel, try to get more viewers on there. So my YouTube channel is called Nathan Robert. It's also in the link tree in my bio. So yeah, if you missed anything on the stream, you can watch it there. The stream stays up, and you can replay it. So here's Progressive Corp. This is another stock I think is at a great valuation right now. This is an insurance company, and check out how growthy they are. Like these year-over-year growth rates in the middle are just ridiculous. I mean, I don't see any negative growth rates. That was from 2008 to 2020. Don't worry about that. But it's at a record. The personal lines here. How about the commercial lines? Yeah, look at this annual trend. That's what you want to see in a stock. So the commercial lines business is also at a record. But look at the margin expansion here on Progressive Corp. The revenue is up 21% year over year, but the net income is up 117% year over year. What that means in English is they're expanding their net margins. They have a 15% net margin. They also have a nice dividend. They normally pay you 10 cents every quarter, but then every January they reward the shareholder with a special dividend. So normally they pay you 10 cents a quarter, but now they paid you $4.50. Same time last year, they paid you 75 cents in a dividend. So with this new record net income quarter, I wonder what it's going to be this same time next year. So yeah, that's why I really like Progressive. I do own them. They're up 2% in the overnight market. I wonder if that's on a lot of volume. I don't know. It's like there's one little volume candle. 10 shares traded on that candle. Probably not real, but anyway. Do you ever utilize index funds? I have like exchange traded funds, ETFs. It's the same thing. Yeah, I love the S&P 500. Talk about Disney. Hey, okay, we could look at Disney too. I do own Disney, by the way. They're really bringing back their streaming services. So the streaming services are showing them a lot of profits. They finally bought the rest of the stake of Hulu off Comcast. So now Disney fully owns Hulu. They own ESPN and Disney Plus, of course. So Disney, their streaming service is finally really profitable, which is great. And they're trading at 18 times net income. You get a nice dividend too, over 1% dividend. They're also opening a new park in Abu Dhabi, which is pretty interesting. They're slow growing though. Like the sales are up by 2% year over year, but the free cash flow has exploded recently. These free cash flow numbers are great, easily over 10 billion of free cash flow a year. So Disney's cool, but I don't expect Disney to really outperform the market in the long run. Blake said, what app or website is this? Yeah, hey, what up, Blake? I'm on a brokerage right here. If you want to get it, it's in the link tree in my bio. It's that very first link there. It's my favorite one. It is an affiliate link, full disclosure. So, someone said, Looney said Main Street Capital. So this is one of the few companies that pay you monthly dividends. So if you're looking for a monthly paying dividend stock, this one's a pretty cool one, and they have a sustainable dividend. They have a 6.3% dividend yield, and here's how much they pay you every single month. So they pay you 25 cents a month. That's nearly 80 cents a quarter. And guess what? They're making easily over 80 cents of EPS in a quarter. So they're making over $1 of net income per share a quarter. So they can easily afford the 6% dividend. Also, they're a BDC, which is a business development company. They actually have to pay out 90% of their taxable income in the form of a dividend by law. So that's why they have an abnormally high yield, but it is sustainable. All right, so yeah. What's this one? PGR is a big auto insurance company. Yeah, you're right, John. So what is this one? CRM stocks, Salesforce. So yeah, Salesforce right here. Let's do it. This is a software company, and a lot of software names have been getting hurt. Like if you look at like Adobe right now, they've been getting crushed, and Salesforce is another big software name. Salesforce though, owns some great assets. Like they own Slack, for example. Let me see how they did. So they beat on revenue, they beat on net income, and they beat on EBITDA. So it was a triple beat quarter. I wonder why the stock fell then. Maybe it was guidance. I don't know. But yeah, the sales were up by 9.7. The net income was up by 32% year over year. So they did grow their margins, which is good. Record 18.5% margin. Well, how about the free cash flow? So the free cash flow did fall by 20% year over year, but it's no big deal. The free cash flow last quarter was $6 billion. It was ridiculous. So yeah, I do like Salesforce, but the AI thesis is hurting them a bit, and Salesforce relies on like the jobs market too, because Salesforce is like, never mind. I don't want to get too far into that, but Salesforce relies on like the I don't know how to word it correctly, so let me just not do that. Okay. But I do like that one. I would just hold them for the long run. So here's Starbucks right here. Starbucks has been struggling with their margins. They're losing their pricing power. And that's why they're the same price as they were back in 2019. So you bought the stock 5 years ago. You're actually down on your position, which is unfortunate. And here's why, actually. Here's the reason Starbucks is struggling. It's the net income collapse. The net income is down by 47% year over year. And here's the thing. They still made net income. They made $600 million in net income this quarter. But here's the thing. They didn't retain that money. They made $600 million of net income this quarter, but the dividend cost more than that. The dividend cost $690 million of net income a quarter. So Starbucks at very least needs to make $700 million in net income a quarter just to afford the dividend. And for the past 2 quarters, they couldn't afford the dividend. Yeah, they made net income, but they didn't retain any of this money. And so that's why this 2.8% dividend yield is a bit at risk. I'd be careful with Starbucks for those net income reasons. Starbucks overexpanded, yeah, and they're losing market share to like Luckin Coffee in China. Wonder if we can find Luckin Coffee stock. Luckin Coffee, here it is, LKNCY. They are Chinese, but this is a coffee shop that legit they have the same quality coffee as Starbucks, but at a way cheaper price. And yeah, their net income is up 45% year over year. And this is just a Chinese company. Yeah, the sales are up by 50% year over year. Wow. Luckin Coffee, there's your Chinese Starbucks company. They're doing pretty good. All right, so talk about PRIV. What is PRIV? We'll check it out for you. So SPDR, private and public credit ETF. So what does it hold? Looks like it owns a bunch of bonds. And yeah, bonds are just IOUs. And so yeah, it just owns a bunch of bonds. Let's see what the yield is. You get a 2.24% dividend yield. So, all right, that one's interesting. If you want a bond play, I like BND. It owns treasury bonds, corporate bonds, every type of bond there is. What do they own? Oh, yeah, a bunch of treasury bonds, yeah. BND is a nice dividend play, and it should go up as interest rates go down. What do you think about Regeneron? Michael Burry bought it. Really? Michael Burry bought Regeneron. That's really interesting. So, hey, what up, KP? What app is this? Yo, Wagyu. If you want to get this app that I'm on, it's in the link tree in my bio, the very first link there. It's actually a brokerage where you buy stocks on. But here's REGN. This is Regeneron. This is a healthcare pharmaceutical company, and they own this product called Isla. And here's why the stock fell so much. They own this product called Isla, and another company replicated it. They made their exact same thing, and the courts found that they didn't infringe on the patent, or they no longer have exclusivity for Isla. So they have this product right here, Isla, and they no longer have exclusivity for it, and that's why the market cap collapsed. And the sales are falling on Isla, but they're selling this higher dose version called Isla HD to offset it. That one is up 30% year over year. But honestly, this stock is starting to look pretty good because the other half of the business, the collaboration revenue, is up 22% year over year. That's very good. They're making strong net income. If you average it out, they're easily making over $1 billion of net income a quarter. They just started paying dividends. Oh, and actually the best part about the stock is the share buybacks. So the net income is down by 3% year over year. So the net income is down by 3%, but the net income per share is up by 3%. So you own 6% more of the company than you did a year ago on top of the 0.3% dividend. So Regeneron risk to reward might actually be pretty decent on them. So what up, KP? He said Lululemon, let's do it. So Lululemon just reported earnings and they are down 19%. So very unfortunate day for them. They lowered their outlook. They lowered their guidance. They lowered their annual outlook due to tariff impact, which was unfortunate. So let me show you this right here. One reason why the stock fell was because the North America sales only grew by 1% year over year. You know, that's their main market, North America. Their revenue only grew 1%, but their international sales grew by 25%. So the international growth offset that. So the total revenue combined was up by 6.5. So revenue is up by 6.5, but the net income is actually down by 6%. So that means the margins did fall year over year. Margins fell by 11%. So do beware of that. But they've also poorly timed all the buybacks before today. Like if we go back down here to the buybacks, you know, all this money they've been spending, you know, a couple $100 million every quarter, nearly all the net income they've made the past year. They could have bought 20% more stock if only they waited before today. So that has been unfortunate. But the buybacks still have helped. You know, net income's down 5.6, but the net income per share is only down by 1.6. So you own 5% more of the shares. Again, I don't like that they lowered guidance. America sales are only up 1%. But I'd probably look for them around a 10 times PE. Apple sells their own bonds. Yeah, you're right. So does Tesla. So does Meta. You may have found my replacement for Starbucks. Hey, I'm glad I could hopefully find you a new stock. Thank you for the answer. I appreciate it. Yeah, no problem there, Mr. or Doctor. Apple sells their own bonds. Or when we look at Apple stock, can you make a video reviewing subscribers' portfolios? Hey, that'd be interesting. You know, my videos don't get too many views on YouTube, but if it get demand, I'd make it. Yeah, by the way, best way to support me is subscribe to my YouTube channel. It's called Nathan Robert. You can just type into YouTube Nathan Robert. It's also in the link tree in my bio, first link there, or second link there. Hey, thanks for that, NNB. Yeah, AJ, if you want to get this app I'm on, it's a brokerage where you buy stocks on. It's in the link tree in my bio. That's the first link there. So someone said AppLovin. This is a stock that just got added into the S&P 500. Another company that just got added into the S&P 500 was Robinhood. Let me actually show you that real quick. I do own Robinhood stock, by the way. Robinhood is up 8% right now. The market is open right now, which is pretty cool. Actually, very quickly, let me view how's the S&P 500 doing. So the QQQ is up 0.3%. So expect a green day tomorrow. Yeah, Apple's up, or Tesla's up 1.2, Apple's up 0.6, Nvidia's slightly down. Okay, but let me get back to this. Sorry. Here's AppLovin. This is the newest addition to the S&P 500 along with Robinhood. They absolutely deserve to be in the S&P 500. This is an incredible advertising company. I like them more than the Trade Desk. So the sales are up 77% year over year. But remember, this number, out of this 1.26 billion of revenue, 820 million of it was net income. That's like a 65, what's the margin here? A 65% net margin on AppLovin. Ridiculous net margin. Also, the free cash flow is great. 800 mil of free cash flow, up 69% year over year. Everything about this company is headed in the right direction. Deleveraging, growing, expanding margins. I mean, if you go spend $100 with this company, $65 of it is after-tax net income for them. Pretty crazy. QQQ, really? QQQ. Instead of QQQ, you should buy QQQM. It's the exact same ETF, exact same NASDAQ 100 strategy, but with the lower expense ratio. You know, they market QQQ to get the crazy fees. They don't market that one. All right, what is RVLV? This is Revolve Group. I think this is a beauty and cosmetics stock. So they're a $1.7 billion market cap. So $1.7 billion, not huge. So Revolve, that business is up by 9% year over year. So that's good, at least. That's up 9. Then the FWRD revenue is up by 9 as well. So both businesses are up by 9% year over year. But they are, the net income, is that real? Oh, so they had a one-time adjustment. So the net income did not really fall year over year. They're making over 10 million of net income a quarter. Pretty good balance sheet as well. I believe this is like a beauty and cosmetics company. Oh no, it's not. Internet retail. Wait, luck. Oh. Anyway, that's interesting. Maybe they are. All right. So John said AT&T stock. Yo, ever since the Warner Bros. Discovery spinoff, AT&T has been doing great. They're not at all-time highs, but they are at like this new multi-year high. They've been on a nice uptrend. They have a nice dividend as well. You get what's the yield here? A near 4% dividend with AT&T. You know, our cell service is through AT&T, so hey, I give them money every month. And yeah, they trade at 16 times net income. Pretty fair valuation. Yeah, actually, it's even lower than that. So they had a one-time adjustment this quarter. It says 145 mil. They actually made 4 billion in net income. So they're really trading at an even lower net income multiple than that. So yeah, they're making 5 billion in net income a quarter. Here's the cash from operations. This is the number that is after paying negative interest payments. So I know they do have a lot of debt. This is the number after paying off the debt. So AT&T is doing great, actually. I don't really expect AT&T, though, to outperform the market in the long run. Like if we zoom out on AT&T, here's the thing. AT&T is this exact same stock price that it was back in 1998. So you bought the stock back then, you're flat on your position, well, plus the dividends. But yeah, you buy that for the nice little dividend. You know, Verizon as well. If we look at Verizon, that's another stock. Like AT&T was the same price that it was back in 1998. Here's Verizon, another stock, same price that it was back in, the year 1998. Unfortunate. And another company with a very nice yield, a 6% plus dividend, but they don't really outperform in the long run. I see a lot of other YouTubers do portfolio reviews. You should try. Yeah, I know Ryan Williams does it too. What about ICHR? What is ICHR? This is iCore Holdings. Oh, this company is on my watch list, actually. So they're a very small company, though. So do beware. They're only worth $580 million. So that's a very small market cap. And the sales grew nicely. The sales are up 19% year over year to 240 million, but they are still losing money every quarter. So do beware. They're losing money every quarter, but it's not the end of the world. They have a decent balance sheet. Yeah, the sales growth is the best thing there. We do want to see their losses start to narrow. That's probably why the stock has been struggling. Africa just ditched Google. Thoughts? What does that mean? Like they don't use the Google Cloud, or they don't allow Google search, or what? I didn't hear about that. Ooh, what up? Someone said Novo. Hey, so this is that weight loss prescription company. So have you heard of Ozempic before? Elon Musk is on Ozempic. If you've heard of Wegovy, those are those weight loss prescriptions. And this is your pure weight loss play. 93% of the revenue comes from their diabetes and obesity care products, which is just mainly Ozempic and Wegovy. And this is in US. They're a European company, so you are paying ADR fees, but this is their USD revenue. They're making over 4 billion of after-tax net income a quarter, and you get a 3.3% dividend. But do beware. The one reason they're trading at this super low industry average multiple, they're trading at 14 times net income because they lose their exclusivity for Ozempic in a couple of years. So they lose their patent on Ozempic. They are seeing a little bit of increased competition from Eli Lilly, but I think the risk reward's actually pretty decent on them to look into them. What sectors do you think will benefit the most from rate cuts other than REITs? I would, all the interest rate sensitive stuff, maybe some consumer discretionary, the home builders, some of those adjacent stuff. I don't know really. Because sometimes, I'm rethinking this in my head. Not always, even if interest rates are lower, it was really the Fed bailing out and like mortgage-backed securities buying this stuff that was helping out certain sectors. So it's tough for me to answer that. I don't know. It's interesting. But here's one thing. As interest rates go lower, a lot of people, right now I get a 4.10% APY on my cash. As soon as they cut interest rates by 50 basis points or whatever, this is going down. So I get this yield on my, there's so much cash on the sidelines right now earning interest. And as soon as that interest stops, like they're not going to be able to earn like 3 to 4% interest on their cash. Maybe some of that money is going to go into stocks. Ooh, someone said JP Morgan, JPM. Didn't Novo Nordisk going to make a big loss? Or why was the big drop? I'm not sure exactly why Novo Nordisk dropped so much. I know there's increased competition and from Eli Lilly. Wait. Oh yeah, JP Morgan. This is the biggest bank pretty much in the world. They're too big to fail. They have a very nice dividend. Like even if you buy JP Morgan stock right now, you still get a basically 2% dividend. You get a 1.8% dividend with JP Morgan. This company legit makes 12 to 15 billion of net income a quarter. So they're making ridiculous net income here, sharing it with you via dividends and share buybacks. Yeah, they're a commercial and investment bank, consumer, community bank, and asset and wealth management. How's that doing? That's up 12% year over year. All right, so thoughts on Google options. So Google, I honestly, Google's a stock you want to just buy shares of for the long run and hold it. You just buy it and forget it. Perfect Mag 7 stock. And yo, no way. Yo, shout out to the YouTube stream, The Wealth Shift. He left a $4.99 super chat. Yo, you just made my Sunday, dude. Said I'm in my mid-20s and mainly hold dividend stocks. Looking to balance out with some stocks/ETFs. Yeah, hey, dude, that's awesome, man. For the backbone of your portfolio, I like the KISS method, the KISS, keep it stupid simple. For the backbone of your portfolio, I would just keep it in the S&P 500 or S&P 500 companies. Like buy ticker symbol VOO, you should just get 8 to 10% a year, or buy some of the individual stocks. Like I'd happily own Nvidia, Microsoft, Apple, Amazon, Meta, Broadcom, Google, Berkshire Hathaway. I'd happily own all those individually. So I'd pick some of those names. And thanks again, man. Your future self will thank you for investing. Yo, me too. So thank you again, the Wealth Shift. I do really appreciate that. Also another ETF, I'd buy QQQM. This is the NASDAQ 100 with the lower expense ratio. It's the exact same thing as QQQ, just with the lower expense ratio. They also have, pretty tech heavy, Nvidia, Microsoft, Apple, Amazon. Just buy stocks you use, buy stuff you use every day. Like if you're on YouTube a bunch, buy Google stock. Amazon, you pay for Amazon Prime, buy Amazon stock. You're on Instagram Reels, buy Meta. And oh my goodness, dude, John Jay. Yo, John Jay, shout out to John Jay too for the $10 super chat. Dude, thank you so much, John. I really do appreciate that. You got some stocks you want me to look at? Let me know. I got you. Yo, thank you guys so much. I do really appreciate that, John. I also wonder if more money will get put into more growth or dividend stocks. Oh, yeah, that's the thing. Maybe money will flow into some higher yielding stocks because they're no longer getting a yield on their cash, so maybe they go into an AT&T. But yeah, in all honesty, Wealth Shift, yeah, I just buy, I do some research on them, analyze their financials. Here are also a lot of growthy names that I own. And also, I wouldn't buy a lot of these stocks at right now valuations. The market right now is generally looks overvalued right now. Like I wouldn't buy pretty much this entire list of stocks. But yeah, I just like buying and holding great high quality companies. I also own Google. I own, here's my main dividend growth portfolio. And this is what I would own, basically this portfolio right here. All these stocks are in the S&P 500. All these stocks pay a dividend, but all of these are also super growthy. Like Meta, Google, Constellation Energy, McDonald's. They all pay dividends, but they all leave themselves so much leftover money that they can do share buybacks. They reinvest back into the business, all without having to dilute you. And yeah, from like boring McDonald's right here, I get a $26 dividend from them, which is pretty cool. I'm about to receive it. How many stocks do you own? Too many. Got about 35 stocks. Haha, I do got too many. So yeah. Thanks again, John, and the wealth shift. I do really appreciate y'all. So, oh, I saw CRMD twice. Let's look at CRMD. This is my most recent stock purchase. This is actually a very small company, but let me give you a quick pitch for this stock. Actually, if you go watch my most recent YouTube video, the third stock I look at, the whole analysis is just toward this company right here. I look at their investor presentation, look at their acquisition, but check this out. I normally don't recommend these kind of stocks, but check this. They're a $925 million company. So think about that. The whole entire company is worth $925 million, and they legit have no debt whatsoever. They owe no one any money, no debt on the books, and they have $190 million of cash. So legit, 20% of their entire market cap is just their cash on hand. That gives them tremendous freedom. That's a huge safety net. I love that. And they're also extremely growthy. The sales went from 800,000 the same time last year to 39 million. They just got FDA approved to sell deaf and cath. And this is the crazy part. Out of this 39 million revenue, 19 million of it was after-tax net income. They have ridiculous margins, 50% net margins. It's ridiculous. And they also just acquired another company. And the growth is expected to continue. The revenue is going to go from 39 million. The analysts are expecting it to go to 63 and then to 98 million because they just acquired a company. So right now they only sell one product. That's the kind of risk here. One product concentration, 60% of the orders just came from one customer, one hospital group. But now they're going to sell 8 different products. And also that acquisition that they're doing is double-digit accretive to EPS. Insane. So it's actually going to... There's synergies. There's 20 to 30 million of annual cost synergies from that acquisition, which is pretty cool. If you want to learn more about CRMD, check out my most recent YouTube video. It's the third stock I go over on it. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. Yeah, I did Luffy. I did get Panda Express. By the way, this is my second stream today. If you want to hit the follow button, we stream every day, sometimes twice a day. We stream every Sunday at this exact same time, by the way. But yeah, in the first stream today, as soon as I got done streaming, I got Panda Express and I got orange chicken and chow mein. It was really good. It's basically all I've had today. I'm about to go feast after this because I'm starving right now. So we'll look at a few more stocks here. So would you consider CEG a growth stock even though it pays a 3% dividend? Actually, CEG has a much lower dividend than that. They actually have a 0.49% dividend. So yeah, CEG has a very low dividend, but here's what I like about them. They also have very low payout ratios. You get a 0.5% dividend, the payout ratio is only 11%. So they have so much room to raise the dividend. And because of that, check this out. Because the dividend costs so little, since the dividend only costs 120 million, they're spending a bunch on share buybacks. They spent 400 million the most recent quarter. They were very cautious with their share buybacks before today because the stock has legit had such a monstrous rally. But I would consider them a growth company. I love this stock. This is the largest nuclear energy play out there. They own 50% of all the U.S. nuclear reactors. They restarted the 3 Mile Island reactor just to solely power one Microsoft data center. They have a partnership with Meta now. Yo, Burner Mail, thanks for the 2 roses there. I do appreciate you, man. If you got a stock you want to look at, let me know. Let's see. What is this one right here? TZA stock. What is that one? TZA. This is the 3X small cap bear ETF. So anything 3X leverage, I'd stay away from. These get smoked in a downtrend because they can't recover at the same rate they fell at. So these always, in the long run, trend towards zero. But you basically buy this for something to short-term trade. You short-term swing trade stuff like this. Yeah, you don't buy and hold those for the long run. Yeah, no problem. I'm Danimal. Hey, no problem. Oh, I didn't know where I saw 3%. Hey, yeah, no problem. Who are their competitors? Well, mainly it's like Vistra Energy, VST, and there is no real competitors. They all win as like a whole, like Vistra Energy. Like for the nuclear reactors, like one who took one for the team is Talon Energy. Talon bought a nuclear reactor. Dude, Talon overpaid like the most ridiculous price for a nuclear reactor. There's so limited reactors in the US, but they ridiculously paid a super overpriced price for a reactor. But it actually made the value of every other U.S. plant now go up. It was pretty interesting. So, and it's that same day, even though Talon bought a reactor, and their stock went up. CEG and Vista Energy, these other stocks went up more. Okay, so Loan Depot, what time do you start your stream? It depends, I've been streaming for 2 hours and 30 minutes. So on Sundays, I started at 8 p.m. when the market opens. Usually it's a little bit before then, but I stream every day, by the way, usually when the market's open. Does Panda have a stock? I don't think so. Chick-fil-A doesn't either. McDonald's does, though. But here's Loan Depot. This is a mortgage loan company. Basically, they can't wait for a lower interest rate environment because they're going to refinance. A bunch of people are going to refinance the loans, their mortgage loans. So, yeah. They're kind of like a Rocket Mortgage and Mr. Cooper. Hey, my hood and app are up big on S&P 500. Dude, yo, Crispy Tater, you on both of those? You are crushing it then. Yeah, mine too. Robinhood is up 7.4%. You're right. They just got added into the S&P 500. So that was great news. All right, so we'll look at one last stock here. Coinbase. Hey, Coinbase is actually a stock owned by Cathie Wood. If we go to the Cathie Wood portfolio, 5% of her portfolio is in Coinbase stock, and it's kind of like a Bitcoin proxy. They usually move with Bitcoin. Here's a really cool stat we get. This is their monthly transacting users. So not just, monthly active users, but here's their monthly transacting users, 8.7 million, up from 8.2 million. So that's a nice little year-over-year increase. The sales, one thing I think investors didn't love, the sales only grew by 3% year over year. So 3% sales growth. The free cash flow, they technically lost money this quarter. It says they made net income, but they technically didn't. They're like a crypto pseudo play. What app is this? Yeah, hey, DeBall. What's up, dude? So yeah. Oh yeah, and you can batch trade, follow super investors. Yeah, if you want to get this app I'm on, it's actually a brokerage where you buy stocks on. It's in the link tree in my bio, the very first link there. It's my favorite one. It's an affiliate link, full disclosure. But yeah, you can track all those super investors' portfolio, like Nancy Pelosi. They have to make all their trades public by SEC law, and you can see their exact holdings and what percent of their portfolio it is, and you can batch trade, follow them in, and set the weightings if you wanted to. So anyway, that's the stream. I hope you guys have a great rest of your Sunday. If you want to hit the follow button, we go live every single Sunday at this exact same time. We also stream every day. Not at this time. We streamed when the market's open. The market opens at 8 p.m. on Sunday, so that's why we do it here. But yeah, if you want the follow button, I really appreciate that. And yeah, does Moomoo have any useful filtering features? It does. I'm Daniel. Yo, if you want to, actually, I forgot to paste it in the YouTube chat. Yeah, I have a bunch of YouTube tutorials on how to use this app as well. So anyway, see you guys later. Best way to support me as well as just subscribe to my YouTube channel. By the way, my YouTube channel is called Nathan Robert. If you missed anything, actually, if you want to replay it, a lot of people like to watch it on the YouTube live replay, and then they leave a comment for a stock they want me to look at the beginning of the next stream and then analyze. So if I didn't get to your stock, if you go to the stream that I'm on right now on YouTube and leave a comment, at the very beginning of the next stream, I'll check it out and give you more in-depth analysis. Anyway, hope you have a great rest of your Sunday. I will see you in the next one. See you later. And yo, shout out to John. Shout out to the Wealth Shift. Thank you again so much for the super chats. I really do appreciate that. See ya, I'm Daniel. See ya, Crispy, JVM, Brendan. See you all later. Thanks for showing up to the YouTube stream. I'm trying to build up the YouTube channel, so I really, really appreciate y'all.